Welcome to the European market open. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Lockdown havoc, Chinese industrial output and consumer spending sink to the worst levels since the pandemic began. Stock futures and oil weaken. Oil embargo, Germany will stop importing Russian crude by year end, even without an EU-wide ban. NATO prepares to welcome Finland and Sweden. Plus, Grayscale, which operates the world's biggest crypto fund, makes its European debut with a new ETF. We'll speak to the CEO this hour.
Now let's take a look at the futures, Tom. This is what we're seeing across the board. A bit of pressure. This has a lot to do, of course, with the global environment that we're looking at. Food inflation higher. We have a very important G7 meeting starting on Wednesday, where finance chiefs assess the global economy, and then a bit of concern over China.
A lot of concern over China, absolutely, around the economic data coming out, particularly around consumer spending down around 11%, just over 11%. Industrial production also slumping as a result, of course, of those very severe lockdowns that you're seeing in Shanghai, but also in the northeast of the country, in Jilin province. And many analysts saying that, look, it's going to continue to remain very challenging for the world's second largest economy. Of course, we look at a policy response. Some of it came through over the weekend with a cut to mortgage rates, but that is just minimal given the extent that the shock that the Chinese economy is facing now. In terms of the read across, then, a reminder of those stagflationary risks. Year to date, of course, global stocks down about 17%. The FTSE 100 lower by 0.6%. We're going to get inflation prints out of the UK and the Eurozone later this week. The CAC 40 is lower by 0.7%, and the Spanish IBEX by 0.5. We have the geopolitics, of course, as well, with that headline, of course, around Finland and Sweden, how that plays into this on, of course, a crucial week once again for the geopolitics. Let's switch it on, see how things are playing out then across asset. Worth reminding viewers that towards the end of last week on Friday, it was a solid session for both European and US equities, the Nasdaq ending higher by a little over 3%. So that is the context, of course, for that day's moves. Longer term, of course, over the last few weeks and months, pressure remaining across global equities, maybe some pockets of value to open up. We'll be discussing that with Rob Parkett in the next few minutes. The Nasdaq futures pointing to losses of 0.7%, a bit of a move again out of risk and even some of the havens. The 10-year currently at 288, down around 3 basis points, and not a great deal of move here. The pound and sterling, this is part of our M Live survey of the day. 122, the survey suggesting you could get to 115, weaker than we saw even during the depths of the Brexit crisis. And in terms of Brent crude, currently at $110 a barrel, softer by 1.3%. The Chinese data, no doubt, playing into concerns about the demand for oil. We want to quickly check on crypto as well, given that we have the CEO of Grayscale coming up in about 35 minutes time. Below 30,000, 29,500, lower by almost 5% in the session today. Again, part of the risk-off move. Ether above 2,000, but no doubt still under pressure, lower by almost 6%. Francine?
Yeah, Tom, I imagine that a lot of what these stocks traders are trying to do is pricing in some kind of global downturn, certainly the risk of an economic downturn amid price pressures and rising borrowing costs remain the main worry out there on the back of that Chinese data, which is why we're seeing a bit of pressure on oil. What we're seeing when it comes to the industry groups or the sectors, if we break it down, there's just one industry group that's gaining. That's telecoms. It's gaining some 0.5%. I know you have pockets here and there of stocks that are actually not doing too badly, but everyone otherwise, all the other sectors on the down, travel and leisure down almost 1%, chemicals, basic resources down 0.7%, Tom.
In corporate news, Renault. Now, this was its second biggest market, Russia. It's come to an agreement to sell its stake in its Russian business. Again, its second largest market outside of France. The maker in Russia, the all-famous Renault, currently down 1% on the back of that deal. Ryanair coming out with a bit of a cautious outlook, saying that it expects to return to reasonable profitability later this year, but warning of potential impacts of things like the invasion of Ukraine by Russia, currently down 3.3%. And RWS, currently unchanged. We'll get the pricing on this in the next few minutes or so, but this is an announcement by Baring Private Equity Fund. They're not going to be buying this company, so the deal off in terms of that speculation. It came out in April that suggested they were looking at RWS. This is a maker of translation and search services. We'll watch that stock when, in fact, it starts to price. Francine.
Now let's get over, Tom, to our Bloomberg MLife Managing Editor, Mark Cudmore. Mark, good morning. Happy Monday. You're looking, of course, at this pretty terrible data out of China this morning.
Yes, good morning, Francine. You're talking there about some companies and how they're doing in the post-COVID world. Well, there's one part of the world that is right back in COVID times in terms of the economic impact, and that is China. And that's why we're trading so negatively this morning. So this is a 10-year chart of retail sales in China, showing the year-on-year growth numbers and industrial production. The yellow line is retail sales, and you can see we really collapsed back in February 2020 at the start of the pandemic. Well, we've just collapsed again. We're right back in that kind of environment. But perhaps more worrying is industrial production has actually fallen below the impact at the start of the pandemic. And that's really, really worrying, because that means we're getting both an inflationary impulse and a negative growth impulse. So really from China this morning, the news is we're getting a stagflationary impulse sent to the round to the rest of the world. These obviously massively missed economists' forecasts. They're way worse than expected. That means the stagflationary impulse has probably been underestimated. And that's why markets are trading pretty negatively this morning.
The underestimation of that stagflationary impulse coming out of China. Bloomberg MLive Managing Editor Mark Cudmore, thank you for breaking that down. The data, of course, out early this morning from China. Let's get into some of the key market drivers. China will be a factor, of course, with Eddie van der Welt, Bloomberg MLive Editor, but also Bob Parker, advisor at CBP Quilvest. Let's start with you, Eddie. Your take then on the China data. Is this as bad as it gets?
You know what? I think that Mark is absolutely right. This is a big stagflationary impulse, right? What we're seeing is the production, if we're seeing production slow just at the same time as demand remains strong in the rest of the world, and, China is still a big factory for the rest of the world economy, I think that just drives this narrative that, central banks will have to push up on rates. But they don't want to, right? Yes, they want to bring inflation under control, but they don't want to create demand destruction, and I think that's the risk here.
So what are we looking at? If you look at markets, okay, extremely bearish overall, because I guess they don't know where to go. There's inflation concerns. There's a clear trajectory for Fed markets. Where do you see? Is there any pocket that looks unloved that could be a good opportunity?
Oh, there are definitely opportunities here, right? I think value stocks still. There's been a lot of talk about value stocks, but they haven't really been outperforming the way we would like to see them. When you break down value stocks, what you've seen is actually it's not the buying of the high value stocks, it's the avoidance of low value stocks. So if you look at factor investing, that's actually where the outperformance has been. So I think value stocks still, I think Europe maybe comes back a little bit if we see a pivot away from the Ukraine being a major risk factor in markets and a major talking point. So there are definitely opportunities in markets here at this moment. Yeah.
Okay, Bob Parker, let's bring you in at this point. Are we finding a flaw with these stocks? Good morning.
Morning. There are a number of supportive factors at the moment, and I would sort of just highlight the level of investor cash, the extent of investor defensive positions. If you look at technical analysis, if you look at data on sort of put and call ratios, clearly that's looking very stretched, and also the degree of investor leverage has collapsed. So all of that suggests that the big decline that we saw in global equity markets, and that decline actually was highly correlated. So for example, if you look at US equity sectors, over the last month, every individual sector in the US equity markets has had a negative return. So this selling pressure and negative performance was really across the board and across virtually all markets. So we do have those sort of short-term technical support factors, but, we have to recognize that we've still got some serious headwinds. The Fed's going to raise rates at its next meeting, probably subsequently. Growth is slowing. And, as a result, I think any support could be short-term. Are we going to get a sustained rally from here? Absolutely not.
So, Bob, are we going to get Are we going to get a recession coupled with actually a pretty strong market correction? We heard from Lloyd Blankfein over the weekend saying the U.S. should definitely prepare for a recession.
Clearly, the probability of a U.S. recession has increased. But I would argue it's still not the central case. The central case is that we go through a period, frankly, of mediocre growth. And I think that there's a high probability, if you look at the next 12 months, that U.S. growth is going to average plus or minus 2%. This morning, we had the revised forecast from the EU Commission suggesting that growth this year is going to be 2.7%. I think they're going to have to revise that down further. We've had these very poor numbers out of China today, and actually one indicator in China, which is frankly very negative indeed, is the service sector PMI. That's now down to 36. That is a recessionary number. So to answer your question, I think it's still premature to forecast a global recession or a US recession like Lloyd Blankfein is suggesting. But we have to recognize a period of very mediocre growth, sort of sub 2% over the next 12 months for the major economies.
Eddie, let's bring you in at this point on all things crypto. The tumult that we saw last week, have we started to see institutions coming back in and proving supportive within the crypto space? Currently still just below 30,000 for Bitcoin.
Look, I think the institutions are learning just exactly how volatile crypto is, and seeing whether they really have the appetite for this. But obviously their clients have wanted them to get in for some time, so not a surprise that they're here in scale. I think the cryptocurrency space right now is telling us a lot more about wider investment sentiment, right? I think cryptocurrencies tell us that people are bearish. I think there is no better barometer of risk right now than the cryptocurrency space.
All right, there you go. You've heard it here first with our Eddie van der Walt. Also some great MLive surveys we'll get to your Bloomberg MLive editor. Staying with us, Bob Parker, advisor at CBP Quilvest. I don't know whether he's fully into crypto yet, but we'll get, of course, Bob's thoughts as well. Coming up later this hour, we'll speak exclusively to Michael Sonnenschein. He is the chief executive of Grayscale Investments about their European debut. That's a little bit later in the program, and this is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Welcome back to the Open. 13 minutes into your European trading day this Monday. European stocks lower by 0.7%. That risk-off sentiment being illustrated by what's happening across the sectors. Two sectors that are in the green this morning, telecoms and utilities, everything else in the red, led by travel and leisure, personal care, construction materials, all lower by solidly more than 1%. By the way, just checking in your currencies, euro dollar trading at 104, sterling 122. Francine.
Now, this week, the MLive Pulse survey focused on the UK to coincide with the launch of Bloomberg UK, our new web presence, showcasing our best coverage of events in Britain. It paints a dark picture for the pound and gilts, but a rosy outlook for the FTSE. Now, the question was, can the FTSE 100 outperform the S&P 500 this year? The majority said yes, with 58% backing the FTSE. Well, Bob Parker, advisor at CBP Quilvest, is still with us. Problem, Bob, is that the UK is kind of like the perfect thunderstorm for everything that the world is living through, but so much more intense in terms of inflation, in terms of what the Bank of England can do. What's your outline and your outlook for the UK?
I'm afraid it's very negative. And we had the report last week from the National Institute for Economic and Social Research, and that was fairly consistent with the Bank of England forecasts, which is that growth is going to contract next year. The second half of this year, we're at best going to have flat growth. And inflation is going to remain elevated. The Bank of England forecast, personally, I think is too high for inflation at the end of the year at 10%. But for the second half of this year, a picture of zero growth and 6 to 7% inflation is the central case scenario. And obviously, we've got political risk, and you've been talking, in the programme about, the problems which are coming to a head over the Northern Ireland Protocol. So markets don't like political uncertainty, and they don't like the risk of a trade war between the UK and the EU. So coming back to your question, can I think of anything positive to say about UK markets at the moment? And the only thing you can say which is positive is that the pound's depreciated very significantly. The FTSE is very undervalued, but the pound and the FTSE can stay undervalued for a very long period of time. So I think you have to remain negative and continue to run short positions on sterling.
Continue to run short position on sterling. That's part of the MLive survey today. 115 is the view from our survey participants is a potential floor for sterling. Remarkable. Do you align with that view? Is that the kind of pressure you expect to see on sterling?
I'd much rather focus on sterling against the euro rather than cable. And coming back to cable, yes, I think the dollar probably is underpinned for a further move, and we're 104 on the euro against the dollar. Yes, we could get to parity, over the next few weeks, particularly with the Fed raising rates. But coming back to sterling against the euro, we're currently trading at about 0.85. I think a move towards 0.87, 0.88 is highly likely. Further selling pressure. And it's quite interesting. One factor is obviously the spread between 10-year bunds and 10-year gilts. Given the prospect of weak economic growth, in fact, that spread's come in, and that takes away some support for sterling. So, 115 is entirely possible, but I come back to my point. I'd rather focus on the euro.
But this is also, and I've heard this quite a lot, in that if you look at the proximity that, for example, Europe has with Russia, there's a real concern that the ECB won't be able to raise rates. So is it more on the euro play rather than on sterling?
I think the consensus is that the euro, the ECB will raise rates 3 times this year. So that takes their deposit rate from minus 50 basis points to plus 25 basis points. And I think it's very clear that the monetary tightening by the Fed is going to be more significant than monetary tightening by the ECB. So the ECB is going to move very slowly. Now, if you look at risk factors in Europe, obviously one major risk factor is that gas supplies are cut off from Russia to Europe, and that would have a recessionary effect, and that in turn would push back the ECB from raising interest rates. But at the moment, that is an outside risk factor. It's not the central case. And I think that the EU forecast of 2.7% growth, as I mentioned, that forecast is going to be revised down. It's entirely possible that this year we'll only see European Eurozone growth, at close to 2%. So further revisions down.
Okay, Bob, just briefly, are you seeing any pockets of value within equities?
The answer is that valuations have come down very significantly, really across the world. And if you look, for example, at some of the Asian markets, I think the Japanese market now represents low risk value. I think it's too early to go into the Chinese market. If you look at some of the Latin American markets, which rallied significantly, they have adjusted significantly downwards in the last month. And I think there are some opportunities there, particularly if you think the metals prices, that correction is now about to form a base, which I think it is likely. And in Europe, there are some pockets of interesting value. And I still think that over the next month or two, Europe will outperform the States.
Okay, further outperformance, or at least outperformance for Europe versus the US in the next couple of months. Bob Parker, advisor at CBP Quilvest. Thank you, as ever, for your insights. Let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Ryanair has issued a guardedly optimistic outlook for the vital summer season. Europe's largest discount airline says that strong bookings trend could be disrupted by a number of factors, including the war in Ukraine. The company is targeting what it calls reasonable profitability this fiscal year. Saudi Aramco has posted its highest profit since its stock market listing. The company saw a boost from surging oil prices in the wake of Russia's invasion of Ukraine. Net income rose to almost $40 billion in the first quarter, up 82% from a year earlier. Last week, Aramco surpassed Apple to become the world's most valuable company. A Bloomberg scoop has revealed that Credit Suisse's board has held early-stage talks on potentially replacing CEO Thomas Gottstein as soon as this year, after a string of scandals and misfires. While the board continues to publicly voice support for Gottstein, some members are said to be increasingly worried that he's not getting a handle on the bank's problems. Goldman Sachs is to allow senior staff to take unlimited vacation days as competition intensifies to retain talent. According to a memo seen by Bloomberg, junior employees will still have limits, but will get 2 extra days off each year. It says staff will be required to take 3 weeks off each year starting next year. That's the Bloomberg Business Flash. Tom, Francine.
Laura, thanks so much, Laura Wright. In London, coming up, April data out of China has shed light on the impact of COVID-0. We'll have plenty more, of course, on that data next. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Welcome back to the Open, everyone. 23 minutes into the European trading day, and you can see there's a bit of pressure. Stock futures rotating in the U.S. European stocks also down some 0.8%. Look, it's poor Chinese economic data fueling concerns about the global outlook, which is why we're seeing more of a correction in some of these markets. Tom.
And China's economy is paying the price now for the government's COVID-0 policy, with industrial output and consumer spending sliding to the worst levels since the pandemic began, and analysts warning of no quick recovery. Joining us now to break down the numbers then is our chief Asia economics correspondent, Enda Curran. And it looks like economists got it very wrong once again with their estimates on China. Were they underestimating then the impact of these lockdowns that we've seen in places like Shanghai, but also in the northeast in Jilin?
That's right, Tom. It does look like these lockdowns and other measures are having a much bigger impact than was expected. I think there were two takeouts from today's numbers. You just mentioned there was weakness across the board in terms of industrial output and investment figures, but the two that stand out were retail sales. That fell 11.1% on month. That's a huge fall for any economy. And on the jobless side of things, there's a surveyed jobless rate, which captures a section of the jobs market at least, and that rose to 6.1%. But the big takeaway from that was within those numbers, youth unemployment actually hit a record, that 16 to 24-year-old age bracket. And I think that's adding this idea that there's now a sense of urgency in China in terms of putting a floor under the economy. Now, economists are asking, does this mark the worst of it? There's some good news coming out of Shanghai today with the vice mayor up there kind of mapping a roadmap for how they can pull out of this. And we know that shops and barbers and drugstores are slowly reopening up there. So that does give some optimism. But of course, everybody's asking how sustainable COVID-0 will be given how transmissible the Omicron variant is.
And is there something else that policymakers and authorities can do to try and ease that pain? Well,
there are a couple of things going on. We had a big move from the central bank over the weekend when they basically bringing down borrowing costs for first-time house buyers. Now, that's actually addressing what's been the other side of the economic slowdown, which is, of course, the big real estate crunch that hasn't been getting as much attention recently due to the COVID outbreak, but that's been one of the big drags on activity. Now, in terms of what they can do on the other side of the economy, the PBOC actually skipped an opportunity to bring down its one-year lending, a money market rate today called a one-year lending rate. They didn't bother to do that because there's enough money in the financial system that won't go towards helping the real economy. But there was a signal from President Xi Jinping. He gave a speech in December at a work conference about the critical importance of taking risks out of the economy and making sure there are jobs for everybody. Well, that speech in December surfaced in the press today. And again, the interpretation is that policymakers are certainly keen that the real economy needs help. And that's why more measures will be expected on the spending side of things, I think, over the coming weeks and months.
Enda, thank you so much. Enda Curran there with a fabulous background, of course, of Hong Kong, our chief Asia economics correspondent. Now, if you look at U.S. futures, Tom, of course, there's also seeing quite a lot of pressure. I think it's a global move where there's a repricing and they're just trying to find a floor. Yeah, the NASDAQ futures in particular lower now, up by more than 1%. S&P E-minis down by 0.7%. Coming up later this hour, we will be speaking exclusively to Michael Sonnenschein, the CEO of Grayscale Investments. Stay with us. This is Bloomberg.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open, everyone. We're 30 minutes into the European trading day, and here are your top stories. Lockdown, havoc, Chinese industrial output and consumer spending sink to the worst level since the pandemic began. European stocks and oil weaken. Oil embargo, Germany will stop importing Russian crude by year-end, even without an EU-wide ban, while NATO prepares to welcome Finland and Sweden. Plus, Grayscale, which operates the world's biggest crypto fund, makes its European debut with a new ETF, and we'll speak to the chief executive in just a few minutes from now. In the meantime, on the markets, Tom, and things aren't looking too hot.
They're not looking too hot within the crypto space as well. Really looking forward to that conversation with the CEO of Grayscale Crypto, Bitcoin and Ether down around 5%. There's concern. It is risk-off. Concern about the data out of China, potentially pointing to stagflation across the global economy. You had the chairman of Goldman Sachs, Mr. Lloyd Bankfine, of course, coming out and saying there is a very, very real risk of recession in the US. Inflation, central bank tightness, of course, and the geopolitical concerns, NATO and that expansion, Finland and Sweden. Will there be a response from Russia? The European benchmark is currently down 0.5%. The DAX is lower by 0.6, and the FTSE 100, as we look ahead to inflation data out in the middle of this week for the UK and the Eurozone, currently down 0.4%. Let's switch it on and see how things are filtering across the sectors then as the risk-off move continues to percolate. And you're looking at the futures lower. The NASDAQ futures stateside, the last time I looked, down more than 1%. Telecoms, utilities, basic resources, just about clinging on to gains. Telecoms the highest at 0.7%. So again, that pronounced shift-off move into some more defensive sectors. At the bottom of the list, you've got construction, travel and leisure. Ryanair coming out and saying they expect to see reasonable profitability later this year, but they are concerned about the potential impact of situations like the war in Ukraine. Francine.
Now let's focus in on the geopolitics, and Germany plans to stop importing Russian oil by the end of the year, even if the EU fails to agree on a ban in its next set of Russian sanctions. Now, European foreign ministers are meeting in Brussels to allay Hungarian fears of the economic impact of an oil ban on its economy. The disco lights. Monday morning. Happy Monday, everyone. Meanwhile, NATO members have enthusiastically rallied around Finland and Sweden after they announced plans to join the alliance. That marks another dramatic change in Europe's security architecture triggered by Russia's war in Ukraine. Well, joining us now from Brussels is Bloomberg's Europe correspondent Maria Today, and Bloomberg's Rome bureau chief Alessandro Speciale also joins us from the Italian capital. Maria, the G7 wrapping with a strong commitment to Ukraine's territorial integrity, but still no deal on an energy embargo. And good morning to you.
Good morning, Francine. And of course, that was the big summit for Annalena Baerbock, the foreign minister of Germany. That was her big test. And in that communique, she got that one line that says, of course, the G7 will not recognize any of the land grabs that Russia may be planning on doing in Ukraine at this point, particularly in the east of the country. The issue, however, pending here is what happens to Russian oil. Francine, it's been 2 weeks since the European Union put out that initial draft plan. And of course, course, the G7 has agreed to it too, but then, of course, you get to the Europeans unable to get to an EU 27 deal. What Germany's doing now, which to me seems like an ultimatum, is to say, okay, if you're not agreeing to this, if Hungary continues to block them, then we're going to go ahead with this. You have to look at the figures too, Francine. The Germans have already majorly cut their reliance on Russian oil. It's gone from 35% at the start of the war to now 12%. But I do have to say, we spoke with the top European diplomat, Josep Borrell, who told us there are some reasons behind the Hungarian position. We hope that today we can clear the air and ultimately get to a united response and approve this package unanimously.
And Alessandra, let's bring you in at this point. What has the reaction been then to the applications of both Finland and Sweden to join this alliance?
Well, it has been a broadly enthusiastic, very positive reception of this request. It had been decades that countries like Finland, even I think Sweden, 200 years of neutrality that are now coming to an end. It is a direct consequence of Russia's aggression against Ukraine. This will be more than 1,000 kilometers of border with Russia, Finland borders with Russia, and will make it much easier for NATO to protect its Baltic members, former Soviet states that have claimed independence that joined NATO.
Okay, thank you. That was Bloomberg's Europe correspondent Maria Tadeo and, of course, Bloomberg's Rome bureau chief Alessandro Speziale on the implications then of this application by Finland and Sweden to join NATO. Don't miss an exclusive conversation in a few hours' time with Ukrainian Foreign Minister Dmytro Kuleba joining Maria Tadeo for that conversation in Brussels. Certainly tune in for that one. Meanwhile, Livia Paghi, head of political risk at GPW, joins us on set now. Livia, great day to have you on, given this momentous news. Given your deep experience with Russia, the people of Russia, the governments of Russia, and of course, Vladimir Putin, what is your expected response? What do you expect the response to be out of Moscow to this decision by Finland and we expect Sweden?
Well, in the beginning, at the beginning of this conflict, the issue of Sweden and Finland joining NATO was much more considered to be sort of a red line for Putin. What we've seen, he's really backed down in terms of rhetoric. He has made some threats that there could be consequences, but really it is much less aggressive than what we initially heard coming out of Putin's speeches early on. This is really in part, I believe, due to Russia's weakening position militarily in the Ukrainian conflict at the moment.
It seems like Turkey's playing a pivotal role. I mean, what exactly is their thinking? We also know that Mr. Stoltenberg, I think, is traveling to Ankara to try and get them on side.
I mean, Turkey has very much always played this dual role between Europe and Russia. Turkey has continued to buy arms from Russia over the years. Turkey's also had a number of conflicts with Europe itself over the past couple of years. And again, we really see it playing both sides, trying to show that it is a key player in this conflict, which we've also seen them do in Syria and in other conflicts over the past year.
So that's a division, that is a split within NATO, Turkey, and we'll see what decision ultimately they come to. Within Europe, and on the question of sanctions, Hungary is proving a problem in terms of getting that sanctions package across the line. Is this a result that Vladimir Putin will be welcoming? Is this what he's been pushing for? Is this success for Moscow?
I mean, absolutely. Moscow knows its biggest card to play here is energy. And what we've seen Moscow doing is using energy as a weapon in this conflict, and increasingly so over the past few weeks by cutting off gas to Poland and Bulgaria. The fact that Hungary is not playing ball with the rest of Europe really shows that how difficult it is for the EU to unite on this issue, and really how much the shortage of gas will impact the European economy going forward.
Livia, how does this change actually the war in Ukraine? So even if we don't have fighting talk as much as we could have seen for Vladimir Putin, does he become more aggressive with Ukraine, or does he, I mean, it's unclear to me, or it's counterintuitive to say that he takes this and kind of doesn't do anything with it.
I think what we're seeing is that certainly Putin has the Russian government has backtracked what it can do militarily in this conflict. We initially saw them looking to take over Kiev and major cities, and right now, from a military point of view, it is really focusing on the east, on the Donbass region, trying to really consolidate its position there. It remains unclear what will happen going forward, whether he'll try again to go for the cities. But at the moment, our military contacts have really indicated to us that he is struggling from a logistical perspective. and therefore we will see probably much more targeted focus in the eastern regions as opposed to the whole country.
How constrained is he around financing this military operation for the longer term?
Well, I'm not so sure how much he's constrained from a finance perspective because he's still getting in all of these foreign reserves from the oil and gas. I mean, certainly it's diminished a bit, but he still has access to foreign capital, even though Europe, the EU, there's been sanctions on the central bank. But from a logistical perspective, from an equipment perspective, from a morale perspective, he is certainly struggling.
So, which means that he'll want to only annex part of Ukraine? Like, what's the end game here?
The end game is really what Putin is best at doing, creating frozen conflicts, where he is a master player in a country without necessarily controlling the entire country, but makes Russia's role indispensable. And whether that means focusing on the eastern part, that might be the option.
But Livia, this also comes with the huge cost of Russian soldiers. So can he really have the backing back home to continue this?
Very difficult to tell at the moment, but polls do show that there is broad support in Russia for this war. It is difficult to tell because obviously the information that the population receives has certain biases. They're getting information that might not be entirely accurate. So it's difficult to know how accurate these polls are, but certainly he does have majority support in country at the moment for the conflict.
Okay, Livia Paggi, head of geopolitical risk, with some fantastic insights there, fascinating insights into how this conflict is unfolding. Of course, the implications of Finland and Sweden as they move closer to joining NATO. Thank you for coming on and into the studio. Coming up, we'll be speaking exclusively to Michael Sonnenschein, the CEO of Grayscale Investments, about their European debut. Don't miss that conversation in the next couple of minutes. That is next. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question. Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Welcome back to the European Market Open, everyone. Well, Grayscale, the operator of the world's biggest crypto fund, is making its European debut. It's launched a new ETF today that tracks a basket of digital asset companies. It's the company's first foray into the more competitive European crypto ETF market. Well, we're delighted to be joined today for an exclusive interview with Grayscale's Chief Executive Officer. He's Michael Sonnenschein. Thank you so much, Michael, for joining us. I mean, first of all, congratulations. It's a big day, I know, for Grayscale in all of this market craziness, volatility. How crowded is the market for crypto ETFs, and are you nervous about the competition?
Well, I think there's a real opportunity around crypto ETFs, certainly in the US as well as in the UK market where there aren't crypto ETPs just yet. I think it's exciting to see that on the regulatory front, both the US and the UK have put out executive orders really focusing on digital asset innovation and regulation. And I think investors have been patient and quite frankly deserve access to this type of exposure in the form of an ETP that has certain protections as well as a certain familiarity to them. So it's a matter of when, not a matter of if.
On the question of timing, I'm given the week that we've just had in terms of the crypto market, the volatility, the extreme moves, the questions around terror. Did you and the team stop and pause and think maybe this isn't the best time to launch?
Well, the product that we're launching into the European market is an equity-based ETF. Many investors have come to know the Grayscale team for digital asset exposure over the last 8 years. And we felt that it was time to give investors a complementary exposure to that digital asset exposure they have, to really focus on the infrastructure, the companies that are building the products and services around the transformation of financial services. So for us, the Grayscale Future of Finance ETF is really about focusing on the digital economy, the confluence of tech, digital assets, and finance.
Yeah, which is the Future of Finance Index actually was pretty much muted where there was a broader sell-off in the markets. But are investors really that sophisticated? Like also, do they not just think, crypto, I'm not sure, like I want to make money, I want to make them fast, and I'm not sure whether now's the right time even to go into the infrastructure?
Well, the thing that we hear from investors is really not so much about timing. Most of the investors who are putting capital into crypto these days are doing so over longer term time horizons. So they're not necessarily going to be deterred by volatility. In fact, they know it comes with the market and comes with the territory. So fundamentally, if their conviction hasn't changed, but they can buy the same asset at 30, 40, 50% lower than they could maybe a few days or a few weeks ago, well then for a lot of investors, that's a compelling buying opportunity.
How are you and how are investors thinking about the fundamentals of this space at a time when, of course, economic conditions are becoming tighter, liquidity is being drained from the system with all the central bank action? What is the overlay on that? Because this isn't going away anytime soon.
Well, unfortunately, it doesn't seem like almost any asset class could be saved from the recent drawdowns, crypto included. So again, many investors are using these pullbacks to either average down on their positions or perhaps take new positions altogether.
But I mean, you're talking about the crypto believers. How many non-crypto believers are suddenly believing, or at least are taking meetings with you to find out more about the product?
Oh, I mean, it's pretty compelling to see who has been investing in the crypto space. I mean, any of the regulatory risk that some investors would have previously perceived around crypto that would have prevented them, that's been shrugged off. Any kind of professional or reputational
like the big
risk.
investors?
Sure, pensions, endowments, hedge funds, absolutely. What's interesting about crypto is that it actually went into the hands of retail first before institutions. So certainly that institutional wave of adoption has been accelerating over the last 18 months. And certainly I think you're going to see a lot more of that into the back half of this year.
Let me take the counterfactual on this, because you just look at the US dollar, it's up, 7% on some measures year to date. Of course, BTC, Bitcoin is down about 40%, 36% year to date. You just buy the greenback and you're getting that hedge. Bitcoin and cryptos don't offer you that hedge around geopolitics. They don't offer you that inflationary hedge. And in fact, within an inflationary environment, they're losing value.
I think when you pull back on a longer term time horizon, the thing that is so compelling about crypto is that it means something different to everybody. For certain investors, it remains a store of value or a digital gold, and it does remain uncorrelated to other markets and can act as a hedge in those types of environments. To other investors, they're maybe more excited about it as a technology, or to some investors, maybe even as a payments rail. But what we have to remember is that it remains early days for the asset class, and every day, every week, we're unlocking new opportunities and new use cases around crypto as a whole.
How did you get into it, Michael? Do you remember how long ago give us a glimpse into how it
Sure.
started?
So I've been around crypto now for about the last 8 years. I had a traditional finance background and was ready for a new challenge, ready to be a part of building something, and the opportunity to now lead the Grayscale business. We have an unbelievable team, and every day everyone shows up looking to build and looking to offer access to this ecosystem.
Talk to me about your views on what happened last week with Terra, which is obviously an algorithmic stablecoin, and then you have Tether, which has its own assets and linkages there. Are you concerned about the vulnerability of Tether, first off? And secondly, those algorithmic stablecoins, is that the death knell for them? Are they out?
We should start with stablecoins in general. These were assets that were created to have liquidity remain in the digital asset ecosystem, primarily for traders and others who would be moving in and out of different digital asset positions and not wanting to have to rely on the traditional banking system to park cash. And so what a lot of investors are thinking about now is just evaluating different stablecoins. Are they functioning as they're intended to do so? We did see a lot of leverage and liquidity come out of the system. And generally over the last 8 years, when you see that happen, it tends to be a good learning lesson for the crypto ecosystem as it's being built. And it does come out stronger and more resilient.
Are you expecting these kind of volatility, crazy swings to last for much longer?
Well, crypto, is a new ecosystem. I will say today that the market around crypto is as developed and two-sided and healthy as it's ever been. You have lending, you have derivatives, you have all the trading tools that investors at one point never had, order management systems, tax lot reporting. And so a lot of that will help to dampen volatility over time.
Do you look at price levels for crypto, for Bitcoin, for Ether, in terms of floors? I mean, we're currently at 29,000. Some people have suggested 30,000 as a crucial level. Does any of that ring true for you? Is there a level that you're looking at for Bitcoin?
Well, I am not going to pretend to be a technician or be able to pick spots. What I will say, if I did have a crystal ball, is that who is investing in crypto and how exciting the ecosystem is and remains how early it is, I do think the opportunity remains quite bright for crypto as a whole.
Michael, overall, so what's your plan are you setting up formal shop in the UK or in Europe, or are you expanding here?
Well, so the Grayscale team was really thoughtful and methodical about our European launch. What we wanted to do is not look at Europe as just an entire continent as a whole, but instead really focus on different financial centers and think about the fact that each of those financial hubs have different investor appetite and different investor behaviors.
UK?
So the Grayscale Future of Finance UCITS ETF will initially be launched on the London Stock Exchange, the Deutsche Börse, and the Borsa Italiana, but will be passported around Europe. So over time, we hope to continue to expand into the European market. But this is a really exciting day for the team and our very first launch into Europe.
Let me ask you about the clock. The clock is ticking on that July the 6th deadline, of course, around your conversations with the SEC to convert the Grayscale fund into an ETF by July the 6th. What progress, if any, have you made with the SEC? Do you think you'll get to that deadline?
So not sure all of the European viewers or global viewers know what's happening, but in the US, Grayscale runs ticker GBTC, Grayscale Bitcoin Trust, the world's largest Bitcoin investment vehicle. We've been working proactively with the SEC to convert it to an ETF, and we continue to make a lot of progress with the SEC and regulators more broadly. Investors who have been, in this product for a while, have been advocating for this product to convert to an ETF. They want an ETF. Ultimately, I said what I said before, it's a matter of when, not a matter of if, and our team is putting the full resources of the firm behind that initiative.
So you're confident it will happen soon, and then do you roll it out to Europe?
It will happen, and we'd love to be able to bring other assets like that to Europe, absolutely.
All right, Michael, you have to come back. Promise?
I will.
There you go. Pinky promise. That's what we do on Bloomberg European Market Open. That was Grayscale's Chief Executive Officer, Michael Sonnenschein.
Okay, coming up later on the show, the European Bank for Reconstruction and Development commits another €1 billion in aid to Ukraine. We will be joined by EBRD President Odile Renaud-Bassot to discuss how the bank is reacting to the fallout of the war. That's in the next hour. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, everyone. We are 54 minutes into the European trading day, and you can see we're still seeing pressure, but actually not as much pressure as there was before. We opened about 0.8% lower. Now European stocks are down 0.5%. Tom, it's all about China, and of course concerns about this global growth story, the fact that we're looking at central banks moving, inflation getting up, and actually even, Mr. Blankfein of Goldman Sachs saying that we could look at a recession in the U.S.
And on China, of course, that data you mentioned, but also this interesting call now from JP Morgan. This was a redhead that crossed the terminal a couple of minutes ago. They are upgrading some China internet stocks to overweight. This is the same team that, of course, put out the note earlier this year saying that the Chinese tech sector was essentially uninvestable, which we then found out through Bloomberg reporting was a mistake in terms of that publication. But the line now from JP Morgan is that they are upgrading some Chinese internet stocks to overweight, including Alibaba and Tencent Holdings, saying that significant uncertainties remain, but they should start to abate on the back of recent regulatory announcements, Fran.
Yeah, we'll have, of course, plenty more on that. At the same time, if you look at U.S. futures, we're also looking at downward trend. Again, it's, I guess, what we look at the G7 on Wednesday to maybe give us a bit of an indication of what could go right or what could go wrong in the economy. So if we have that U.S. board, you can see U.S. futures down some 0.6%. Telecoms actually here in the U.K. advancing. Vodafone climbed after an Emirates state-backed firm, but 10% of the company, more or less. And then we look at the bond market, the 10-year U.S. yield dropping to around 2.89%.
And we've had a wild couple of weeks for the FX markets as well. Euro dollar, of course, we continue to watch for parity on that, 1.04. Currently essentially range bound. The Bloomberg dollar index is stronger by 0.1%. And then sterling, this is part of our MLive survey of the day. The forecast that you're going to get to 115 on pound dollar at some point this year. Kind of 122 is what we're on now for the pound, down 0.3%. The UK, of course, front and centre when it comes to concerns about stagflation. Francine.
Now that's it for the European market open. Surveillance early edition is up next. We'll have plenty more, of course, on our top main stories. We look at NATO, we look at Ukraine, we look at markets, we look at treasuries, we look at China, we look at politics. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
There is very strong consensus for bringing Finland and Sweden into the alliance if they choose to formally apply.
In every past recession, we've grown stronger and faster because people don't stop flying in a recession. They get more price sensitive.
It's definitely a risk. If I were running a big company, I would be very prepared for it. If I was a consumer, I'd be prepared for it. But it's not baked in the cake.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Lockdown havoc, Chinese industrial output and consumer spending sink to the worst levels since the pandemic began. Stock futures and oil weaken. Oil embargo, Germany will stop importing Russian crude by year-end. Even without an EU-wide ban, NATO prepares to welcome Finland and Sweden. Plus, brace for pain. Goldman's actually cut its U.S. growth forecast. The senior chairman, Lloyd Blankfein, warns there's a very, very high risk of a recession. Now, first thing is first, let's check on the markets because they tell a picture of 1,000 words. This is a picture for the European stock 600. They're actually down some 0.3%. We did start the session, if I could get my words out. Happy Monday, everyone. We hope you had a great weekend. If you look at European stock 600, they were down some 0.8% at the open. So some of the anxiousness that we saw because of that, of course, China data seems to be abating somewhat. Technology still on the down, 0.9% lower. It's really this poor Chinese economic data that fuels concern about the global outlook, pouring cold water on last week's brief revival of risk sentiment. The dollar, watch out for dollar, but I would suggest watch out for, of course, the dollar against euro, the dollar against sterling. Currently, we have the Bloomberg U.S. dollar index at 1258. And then Bitcoin, always good to talk about Bitcoin. Is it the new hedge against inflation? What is it exactly? We pay attention when it's below 30,000, currently at 29.615 after a bout of a huge, strong volatility that we saw over last week. Now, this is a picture for European stocks. Certainly, if we have the map where we look at what countries are holding up and the ones that are doing worse. So you have the UK, this is very commodity rich. If you look at oil, it's seeing a little bit of pressure, but still holding on pretty much steady, even on the back of that Chinese data. So the FTSE down 0.1%, the FTSE MIB also down 0.1%, but then if you look at the DAX and the CAC 40 down 0.5%, the IBEX over in Spain, look at that, it's pretty much flat. Now, Goldman Sachs Senior Chairman Lloyd Blankfein has urged companies and consumers to prepare for a U.S. recession. In an interview with CBS, he says it's not a certainty, but there's only a narrow path to avoid it.
Do you think we're headed towards recession?
We're certainly heading. It's certainly a very, very high risk factor, and there's a path. It's a narrow path, but I think the Fed has very powerful tools. It's hard to finely tune them, and it's hard to see the effects of them quickly enough to alter it. But I think they are. I think they're responding well. I think it's definitely a risk. If I were running a big company, I would be very prepared for it. If I was a consumer, I'd be prepared for it. But it's not baked in the cake.
Now we're joined by Banu Baweja. He's Chief Strategist at UBS Investment Bank. Banu, as always, thank you so much for joining us. Recession or recession, what kind of correction can we see?
Look, it's late cycle. It's not about growth. I don't think it hasn't been for a while. I think it's about liquidity, right? And real interest rates are rising, and credit spreads are going to widen. So I think you can see a further correction. So you could, in the worst case, if you do get a recession, plus you get real rates going higher, get towards about 3,600 on the S&P. But I don't think it's only about growth. I think at this minute, the numbers are actually going to start getting better in Q2, Q3.
Across the world or only in the U.S.?
In the U.S., in China, Q2 is going to be diabolical. You're going to get about a 6% annualized correction in China in terms of the economic growth.
So why were we not expecting the ugly China numbers that we had today? If you have a full lockdown, and we were reporting on it, I mean, it was clear to see. Why did we not get it right?
China data has always been extremely volatile. Right? So in terms of whether or not you're seeing the freight data improve, whether or not you're seeing actually the subway traffic improve, these are difficult numbers to put in place. But, you know, also their FAI number, their fixed asset investment number, is always a number that they put in as a residual, which actually lifts the overall numbers. But you see from consumer sentiment, by the way, this is not just China. You've seen this in the US, you've seen this in Europe, you've seen this especially in the UK, which I think is the laboratory of the stagflation thesis, that in fact retail sales have been extremely poor. So the consumer has been on strike in real terms for some time. When I say some time, I mean about 4 quarters now, since Q2 of 2021, the consumer has been quite weak. What's different now, of course, China's completely different because they have shut down, but in other places, CapEx sentiment is weakening. We'll see this week in the US as well, CapEx sentiment is weakening. But the question is this a garden variety slowdown because inflation is up, or is this a proper recession? I don't think it is.
Does this end well?
Well, look, we are late cycle. We are going to get a recession at some point, but it's not imminent at all. I think the liquidity question is the bigger question than the growth question. And liquidity is tightening, and that's the headwind for the markets. We're coming from a very strong place, so I think there's further to go on market correction.
Can central banks do anything with liquidity?
They need to tighten it. They need to tighten it. The liquidity is not collapsing in a sense of financial markets breaking. Yes, there's a little bit of lack of liquidity in the tips market, in the credit market, but they need to tighten liquidity because inflation's the elephant in the room.
But what I don't understand is that basically, you know, a lot of central bankers around the world are also guiding the market. So is it because they're worried? I mean, there's, you know, guiding the market at some point, that there's this interdependence about what markets are doing and what the Fed, for example, is telling them, taking out the 75 basis points off the table. So what's their relationship right now?
Well, in terms of where the Fed's put is, there's no doubt that the strike of the Fed's put has moved much further. And I think the market we need to watch more than the equity market is the credit market.
Yeah.
And out there, if you see sort of high yield credit spreads relative to IG credit spreads, they're actually closer to their tights than their wides. So they're actually closer to peak cycle rather than closer to a recession. So not all markets are talking about a recession. Right. By the way, the bond market is completely, it disagrees with the recession because at one point it had completely flattened and also had begun to invert. But if you look at further out, 2 to 3 years, markets have taken out cuts. Yeah. So you don't take the terminal rate high when you're worried about a recession.
Yeah, but even in the inverted yield curve, it would have been very easy for the Fed not to make that happen. Right? They could have controlled that.
They could have controlled that, but the Fed at this minute has a one-point agenda, sort of an unconstrained optimization. They just have to go hard to slow down inflation, and if that means the demand route, they probably have to do that, right? But you're coming from a very, very high. Look at the banks. Okay, the banking system is not under stress. Non-performing loans are not increasing. Default rates are still on the sort of 3 handle. If you look at the labor market, still extremely tight. The consumer's on strike. It has been for 3 to 4 quarters in real terms, and capex is slowing down at the margin, but it is likely that as we go towards late Q2, early Q3, some of this data begins to improve, Russia permitting, natural gas permitting. So that, I think, is the big issue. So where structurally you have a problem is China, I think.
So where do you see the best investments right now?
So in terms of the whole market as a whole, I think probably comes a little bit lower because I think the growth stocks are going to drag down. But there's some parts of European cyclicals that are already beginning to price in a recession. Sort of a 40% chance of a recession is already being priced in some consumer names and some financial names. And these are the places where you begin to buy. I think break-evens are too high, so break-evens begin to come down. So in the bond market, if you're going to go back into the bond market, rather than going to real rates, which can still lift, I think break-evens come down.
And you would go back to the bond market? This is the right time?
inflation break-evens, not in real yields right now, yes.
Quickly on Europe, what do you do? I mean, because of the proximity, of course, to Russia, is it going to be very difficult for the ECB to raise rates?
I think the ECB will have to, because inflation is high and is broadening. So we're going to get some data this week as well. So 7.5% is what we think, and we think this stays here till September. So I think the ECB will have to raise rates. A bigger question further down the line is whether you're going to manage inflation or you're going to manage spreads. But hopefully that's not a question for now.
Oh, it'll be a question in the next block. Thank you so much, Banu Aisha, Chief Strategist at UBS Investment Bank, stays with us. So fun to have you in the studio. Thank you, Banu. Coming up, book your plane tickets. Goldman Sachs will allow its senior staff to take unlimited number of vacation days. I'm not sure whether you can leave the country or not, but look at that. We're showing you beautiful pictures of white sandy beaches where you could go on vacation. We'll talk the latest move by a Wall Street bank to retain talent in a hot job market. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, NATO members have enthusiastically rallied around Finland and Sweden after they announced plans to join the alliance, marking another dramatic change in Europe's security architecture triggered by Russia's war in Ukraine. Their accession will bring improved ability for the alliance to defend the Baltic region. Now, for more, we're joined by Bloomberg's Rome Bureau Chief Alessandro Speciale and our Euro reporter Maria Tadeo. So, Alessandro, what has been the reaction to the applications, and how does this process actually proceed from here?
Well, the reaction has been overwhelmingly positive. NATO members, especially Eastern European NATO members, the Baltic countries, which were once part of the Soviet Union, are very happy that Finland and Sweden will be joining, which means that the northern flank of the NATO alliance will be shored up. There will be 1,000 more kilometers of border with Russia, and in an event of a conflict, the risk of the Baltic countries remaining isolated from the rest of Europe is much, much less. There will be ways to bring them support. Of course, Turkey has voiced some concerns, especially because of Sweden's support of Kurdish terrorists, what Turkey names terrorists. But Stoltenberg, the NATO chief, has said that he is confident that these wrinkles will be eased out.
Thank you, Alessandra. Maria, the G7 foreign ministers meeting wrapped with a strong commitment to Ukraine's territorial integrity, but still no deal on a Russian energy embargo.
Yes, and this was a G7 meeting, of course, that was led by Annalena Baerbock in what is her first big diplomatic test as foreign minister of Germany. Now, they agreed on that statement that they would never recognize a potential land grab from Russia in the east of Ukraine. Remember, that's where the fight is at, and we've seen that Russia is putting on the table those referendums that they've done in the past to try to annex Ukrainian territory into the Russian Federation. The G7 was clear, we're not going to accept any of this new lines, artificial lines drawn by Russia. However, Francine, you're very right to note that oil embargo, it's been weeks now, and the EU27 is not able to get to an agreement. A lot of this has to do with Hungary and Viktor Orban. The Germans now saying an ultimatum, if we don't agree with this, then we'll just go by ourselves alone, and we'll do this by the end of the year. We're going to pull out of Russian oil, whether or not there's a deal at an EU27 level.
Europe correspondent there, Maria Tadeo, and our Rome bureau chief also, Alessandro Speciale. Thank you both. Don't miss an exclusive conversation also. In a few hours from now, Ukrainian Foreign Minister Dmytro Kuleba joins Maria for an exclusive conversation from Brussels. Now we're back with Banu Baweja, chief strategist at UBS Investment Bank. We were talking, Banu, of course, about inflation. I want to talk a bit about the UK and China. But what's the likelihood that we get some kind of energy embargo? If we start touching Russian gas, what happens to Europe?
That's the one way you can get stagflation, right? If Europe says, I don't want Russian crude, there is a possibility that Russia says, you can't also have my natural gas. And that's the channel through which because crude is fungible, more fungible than natural gas is, and if Russia was to shut off the supplies of natural gas, that's the channel through which you get both inflation and much weaker growth. Now, the reality of the ground is actually quite the opposite in that since the war, you've actually seen storage utilization facilities for natural gas fill up. Right, so Europe is getting the gas, and Russia is also sending so far. So far, the disruption, even in crude, let alone natural gas, has only been about 1 million barrels a day. So I think we have to watch and see. But if Europe is to shut off crude, and if Russia says you need to pay for this in rubles only, or if they shut off the natural gas, that's when we will have to change our mind on bonds, on equities, everything. That is a game changer.
But we're also just getting some breaking news out of the U.S. Senate Majority Leader Mitch McConnell speaking in Finland, saying that there's strong bipartisan support for Finland joining NATO, and he says he aims to approve Finland in NATO before the August recess. Does this change anything to the way you view the economics? It's hard to look at. Well, first of all, to be in Vladimir Putin's mind, really, to try and figure out what, economic ramifications this horrible war means.
Well, it probably means that the long-term price of oil, so 12 months out or even 60 months out, 5 years out, is probably going to stay elevated right now. So that risk premium is not going to go down. The curve has been extremely backwardated, but long-term oil and long-term energy prices can go up, which is important for central banks because, when you pose the question you posed to me earlier about ECB, what does the ECB do? To someone who's as centrist as Schnabel at the ECB, they have been saying that, look, earlier, we'll look through this. We can't look through this anymore because this is impacting inflation expectations. So if this tension in natural gas, in crude, keeps long-term inflation expectations higher, central banks will have to react, and that takes away liquidity from the market.
But what do you do with the UK? So the UK is kind of almost a template of everything that we're living through, but just much more intensely. It's inflation, it's a central bank that is not quite sure what...
The UK has some idiosyncratic negatives, right, Francine, because it has Brexit. The labour market is super tight, but not only because demand is strong, unlike the US, it is also because supply curve has moved left because of Brexit, right? So the participation rate is worse than it is in the US. It hasn't recovered, despite the fact that you didn't get the same amount of stimulus. So this, I'm afraid, is almost the laboratory of the stagflation thesis. If stagflation is going to come, it probably is going to come here. It's probably going to come here before. And this is why I think the one central bank who is umming and ahhing a little bit more than the others in terms of inflation, correctly so, is the Bank of England.
Why correctly? Because they seem to also be behind the curve.
They are behind the curve, but they ought to be much more worried about growth than other central banks. Because again, if inflation is high because the supply curve has moved left, and that solves for a lesser equilibrium output, and that basically means that you have to be worried about growth as well. So labor market tights right now, but we have to watch for what happens in financial conditions, watch for what happens in housing, for instance, and go from there. So I think they have to step on broken glass very gently.
I mean, the Northern Ireland Protocol is also another thing that we are looking at. What would it mean if there was a unilateral pulling out?
Well, the possibility of a hard Brexit then really becomes sort of embedded, and that puts pressure on the sterling, that puts pressure, therefore, on inflation, and creates more room for the BOE have to be hawkish in a tight economy or dollar in an economy that's at that point weakening. So I think, of course, that creates much more trouble for assets in Europe, and that's why local assets, so if you look at the FTSE 250 relative to the FTSE 350, that has been suffering, and I think we can see a bit more of that.
I need to correct myself because Mitch McConnell, of course, is a minority U.S. Senate minority leader. This is what happens to a brain after we've had a good weekend on a Monday morning. Banu, talk to me about China. So what are the longer-term implications of this China that's grappling with the zero COVID policy? I mean, does it stick with it?
It probably sticks with it, Francine, but I think, even before the zero COVID policy, common prosperity had I think, been a big change in the markets. In my opinion, in 10 years' time, when you look back at 2021, 2022, you're probably not going to think about inflation exploding. You're probably going to remember that China changed its reaction function for the first time in 42 years. That could be sort of the biggest change in the global economy on a 5 to 10 year horizon, and I think that matters for the rest of the world as well.
So, and the market is what, not looking at that yet because they're on the much shorter horizon?
That's a disinflationary impact in the medium term. So commodity prices are not there, right? Copper, iron ore has been okay. Copper prices have been flying. So this impact, I think, is a temporary impact on these markets being lifted because of electrification and so on. Chinese real estate, I think, is the bigger driver of these markets in the medium term. So personally, I would not be chasing materials much higher here.
Because also you see, I mean, for example, the U.S. is sitting on quite a lot of rare earths.
That's absolutely right.
Does the Russia situation mean that a lot of countries that can afford it will start digging these even if it's a higher cost?
Yes, that's very possible that'll go. But at the same time, we have to think about more fundamental issues like what is the demand for oil in the medium term from China? What is the demand for copper from China and iron ore? I think this is what's going to drive commodity prices in the broader complex. And I think that demand is going to come down because unlike the US, where investment to GDP is actually likely to pick up in the next several years, in China, it's going to very clearly come down. And that's not priced in the markets, not in the rate markets. Look at Aussie backend relative to the US backend. Doesn't make a lot of sense.
Banu, thank you so much. I could speak to you for another 3 hours, so don't be a stranger, Banu. Come back soon, right here on Bloomberg's Events Early Edition. Banu Baweja, Chief Strategist at UBS Investment Bank. Coming up, the European Bank for Reconstruction and Development commits another 1 billion euros in aid to Ukraine. We'll be joined by the EBRD's president, Odile Renaud-Bassel, to discuss how the bank is reacting to the fallout of the war. That's in around 20 minutes from now. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, let's take a look at some of the things to watch out for this week. Today, the European Commission releases its spring economic forecast. Now, today is also the deadline for hedge funds to disclose their U.S. equity investments for the first quarter in 13F filings with the SEC. On Tuesday, Fed Chair Jay Powell speaks at the Wall Street Journal's Future of Everything conference. We'll also have U.S. retail sales data along with Walmart earnings. Then on Wednesday, Tencent reports their first quarter results. Also, G7 finance ministers and central bankers meet for a summit in Bonn, Germany. On Thursday, the ECB publishes the minutes from its April policy meeting. We'll also have U.S. initial jobless claims. And then Friday, President Joe Biden begins a 4-day trip to South Korea and Japan. Plus, the latest CPI from Japan is also released. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne, and happy Monday.
Happy Monday to you, Francine, and hello. It's been a while since we've been on set together. How nice. Now, Germany says it will stop importing Russian oil by the end of the year, even if there's not an agreement on an EU-wide ban. Foreign ministers from the bloc are meeting today to discuss the next round of sanctions. This comes after EU diplomats discussed a delay in the oil ban after objections came from Hungary. Now, China's economy is paying the price for its COVID-0 policy, with industrial output and consumer spending sliding to the worst level seen since the pandemic did begin. Retail sales contracted 11.1% in April from a year ago, far weaker than the 6.6% drop forecast by economists. Industrial output unexpectedly fell 2.9% in the period. Now, Boris Johnson is warning the UK will press ahead with unilateral changes to parts of the Brexit agreement if the EU does not engage in genuine dialogue. This comes ahead of a visit by the Prime Minister to Northern Ireland. Now, that's happening today. London is unhappy at checks on UK goods crossing the Irish Sea, as mandated by the Northern Ireland Protocol. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. More markets. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Lockdown havoc, Chinese industrial output and consumer spending sink to the worst level since the pandemic began. Oil embargo, Germany will stop importing Russian crude by year-end. Even without an EU-wide ban, NATO prepares to welcome Finland and Sweden. Plus, brace for pain, Goldman cuts its U.S. growth forecast as senior chairman Lloyd Blankfein warns they're very, very high risk of a recession. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Ryanair issued a guardedly optimistic outlook for the vital summer season, cautioning that a strong bookings trend could still be disrupted by a number of factors, including Russia's invasion of Ukraine. We've been speaking to the chief executive, Michael O'Leary.
We're so big across so many markets in Europe. Certainly, there's very strong demand to the beaches, the leisure destinations of Europe this summer. But we also have a huge business in, UK short-haul, domestic travel, Italy domestic travel, Spain domestic travel, and that books much later because it's domestic travel. And it's prone to being very badly disrupted by adverse news flows. We saw it with Omicron at Christmas. We saw it with the Ukraine invasion at Easter. So I think we're sensible this morning to be cautious. We've seen too many airlines out there in recent weeks, talking up the recovery, mainly because their balance sheets are shot to pieces. But they're talking up the recovery. The end of Omicron is here. We can't eliminate the risk of another variant next winter. You see what's going on in China at the moment. They're struggling to contain COVID generally. So I think we're seeing very strong recovery into the summer, but I'd be very cautious on next winter for the moment. We have a very strong balance sheet. We raised cash both from shareholders and in the bond market during COVID. As we've just said this morning, we finished the year at the end of March with 3.3 billion in cash. That figure has since risen to over 4 billion thanks to the strong forward bookings into the summer. So we have a very strong balance sheet, no requirement for additional equity.
Well, that was Ryanair Chief Executive Officer Michael O'Leary. Now, a sell-off in crypto accelerated today after weak data from the Chinese economy actually dented appetite for riskier assets. But in comparison to last week's turmoil, the crypto markets are calmer. Well, we're now joined by Marion Labour, analyst at Deutsche Bank Research. Marion, thank you so much for joining us. It's been wild for the last couple of weeks of crypto. What are you seeing out there?
Yeah, thank you very much for welcoming me here. So I would say that cryptocurrencies are currently facing a spring cleaning, and it's very important to put things in perspective. If we look back in 2017, the market cap of cryptocurrencies in general was $18 billion, and the value of one Bitcoin that year was 1,000. In 2021, at the peak, the market cap of all cryptocurrencies was $2.9 trillion, and the value of one Bitcoin was $68,000 in November. So today, as a demonstration of this extremely volatile market, the market cap for all crypto is around 1.2 trillion, and the value of one Bitcoin, I would say, is around 30,000. So as we can see, there is a wild fluctuation in value, and it raises the question, what's the real value of cryptocurrencies? And as I mentioned a few times, this is a highly volatile market. We expect to remain volatile in the short term. And having said that, we should also notice that crypto integration within broader financial markets is still small, but the Bitcoin market is also equivalent to be the 8th largest company in the world by market cap.
So Marion, so talk to me a little bit about what cryptocurrencies are right now. Is it a hedge against inflation? They seem to be very correlated, of course, with what's happening with tech and U.S. equity stocks.
Yeah, so that's a very good one. So the correlation between crypto price and the Nasdaq remains extremely high, as you mentioned. And we have seen that in the equity market already, and it's actually what we are seeing now for cryptocurrencies in general. And similar to equity, I think we are facing an uncertain economic outlook, high inflation, rate high expectations, even more, and a geopolitical conflict. So on digital gold, as you mentioned, like, is it like a good hedge against inflation? I think it was the case. It's no longer the case. Cryptocurrency did see price increase as inflation peaked last year, but this was due to excess liquidity that also drove tech stocks much higher. So given that the Fed turned hawkish, we expect higher rates. I don't think it is at the moment. And as we saw it in May, a few days ago, inflation peaked at 8%.
So, Marion, what kind of volatility are you still expecting? I know it's a very difficult question, but I don't know if you're looking at levels or just expecting it to zigzag quite a lot until we get regulation. Is regulation a good or a bad thing for this crypto space?
So I think we need regulation, and there is a real push for regulation, as we have seen last week, especially for stable coins. And in terms of volatility, I expect cryptocurrencies to remain volatile, and regulation, I see it as a good thing. First, the crypto market needs to be regulated. It needs to have like a clear framework for companies, for consumers, for everyone in the market. And I expect regulation, when we will have a clear framework, to have probably more companies to start buying in crypto. So crypto as a mean of payment, and to have a volatility which is lower, driven by a higher liquidity.
Marion, where do you see the biggest, I don't know whether it's, there's psychological factors of this buy and sell mentality, or whether it's based on fundamentals, and how you see that developing in tandem with regulations?
Yeah, so I think that there is many different factors. Actually, we explained the drop last week. Obviously, there are the news due to stable coin that we have seen. In terms of psychology, I also think that it plays a role, and I would say that the Tinkerbell effect is there even more these days, and people tend to think actually and tend to pay the price that they are thinking, that they perceive in terms of cryptocurrency. So there is a lot of the Tinkerbell effect, and we are also seeing that crypto, and it's true for crypto in general, but even more for Bitcoin, it tends to be like closer and much more regulated to US equities and to the Nasdaq in particular. So when you have like an uncertain outlook, high inflation, high expectations, geopolitical conflict, it pays even more the price.
Marion, what is the real value of cryptocurrencies? Like, what kind of fundamentals do you look at to find that?
Yeah, so as I said, you have like several fundamentals. In terms of rational factors, you can look at the supply, the demand. Regulation is going to play a big role looking forward, depending on what we get in terms of clear framework. And volatility is still going to be there as well, and the geopolitical context will be like increasingly dominant in thinking about like rate hikes, especially on the Fed.
Marion, thank you so much for joining us. Marion Labour, they're analyst at Deutsche Bank Research, joining us on crypto. We're so happy we found a crypto analyst, Marion, so congratulations on that. Makes our life so much easier. Coming up, the European Bank for Reconstruction and Development commits another 1 million euros in aid to Ukraine. We'll be joined by President Odile Renaud-Bassot to discuss how the bank is reacting to the fallout of the war. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine, and thank you. Ryanair has issued a cautiously optimistic outlook for the vital summer season. Europe's largest discount airline said that a strong bookings trend could still be disrupted by a number of factors, including the war in Ukraine. Ryanair says it's targeting what it calls reasonable profitability this fiscal year. Now, Saudi Aramco has posted its highest profits since its stock market listing. The company saw a boost from surging oil prices in the wake of Russia's invasion of Ukraine. Net income rose to almost $40 billion in the first quarter, up 82% from a year earlier. Last week, Aramco surpassed Apple to become the world's most valuable company. And a Bloomberg scoop has revealed that Credit Suisse's board has held early-stage talks on potentially replacing CEO Thomas Gottstein as soon as this year after a string of scandals and misfires. While the board continues to publicly voice support for Gottstein, some members are said to be increasingly worried that he's not getting a handle on the bank's problems. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now, the European Bank for Reconstruction and Development committed another €1 billion of aid to Ukraine at its 2022 annual meeting in Marrakesh. The impact of the war dominated discussions, and the EBRD president, Odile Renaud-Bassot, acknowledged that it will shape the bank's activity for years to come. Well, we're now joined by the president, Odile Renaud-Bassot of the EBRD. Thank you so much for joining us, Mrs. President. When you look, first of all, at the annual conference, you announced that donors will commit to this €1 billion for Ukraine. What role do you, first of all, expect the EBRD to play in this, and when can Ukraine actually receive the money?
So the role of the EBRD in Ukraine has been historically very important. We've been intervening in the country in the last 30 years, financing 16 billion of investment over the last 30 years of activity there. And what we are doing now, when the country is in war and facing huge economic and financial challenges, is to focus on supporting the real economy. So we finance, for example, trade finance, supporting import and export of goods, but also big public infrastructure to keep the basic services for the population of the business functioning, such as electricity, gas, but also the railways. Railways are very important in the context of the war to transport people, but also to transport food and so forth. And we are also supporting the private sector, for example, for the swing campaign and food security, partnering with local banks and providing them some support. We expect to be able to disburse very quickly, on this project, and so in the coming months, before end of June, we expect to disburse 400 million, and then 1 billion at least in the course of 2022. Sorry.
So what happens once the war is over? And I don't know whether you have a timeline that you're working on. I know, of course, it's extremely unpredictable and difficult to know, but is there more of an effort also after this ends?
So, of course, when the war will be over, but I cannot give you a timeline. I think nobody really knows when this will happen, but there will be huge needs for reconstruction. And it's also possible that we will need to start rebuilding some infrastructure, for example, some bridges that have been destroyed, railways and electricity component already before a full-fledged peace agreement is there. But I think when we will move towards reconstruction, it's very clearly acknowledged that the needs, financial needs will be huge. The level of destruction, for example, of infrastructure is assessed by Ukrainian economists at something like 90 billion euros destroyed already. And so that will be a huge effort, and I think the EBRD will play an important role in that effort.
Of course, Russia and Ukraine are big exporters of agricultural commodities. So how is that impacting the access to food, especially in northern Africa?
It's a huge question because currently Ukraine has a lot of grain in storage that cannot get out of the country. It was the stewage campaign from last year, and usually it's transported by boats from the Black Sea, and now the access is completely stopped. Russia, there is a sort of blocus, and there is no capacity to export the grain, and this is a huge challenge for food security worldwide, because countries like Morocco or Egypt buy a lot of food from Ukraine and Russia. These two countries represent more than 40%, 50% of grain export worldwide. So this creates a huge challenge, and there is a big logistical issue, because transporting grain through trucks or railway it's impossible to have the same capacity level.
So what does it mean longer term? Is there, are there other countries that could, make up for some of that loss in supply, or do you see a population needing to adapt to what they eat?
No, there is a lot of work, I think, at the global level to try to step up production in other countries. And in that respect, I think the recent trend from some countries to limit and to forbid export of grain and so forth is not a good news, because it will create a lot of difficulties in the trading and feeding some of the countries. So I think that's, but a big effort must be put on increasing overall capacity, providing also fertilizers in all countries that are needed, because this is also one challenge created by the war, but also helping to find some solution with Ukraine in the very short term.
Yeah. What are your members actually saying about Russia? I know we heard and we saw tweets about certain members, of course, walking out when the Russian, the Belarusian delegation was talking. Can you give us a flavor of what some of these meetings are like?
No, so I will not comment on what happened in the meeting, but of course, EBRD has taken a very clear position condemning the war very early, in the few hours after the invasion. We've also, with a very strong support from our shareholders, decided to suspend formally any access to EBRD resources to Russia and Belarus. So this reflects the feeling of a very large number of our members that are, condemning very, very strongly the war and the attitude by Russia and Belarus.
Do you see a rapprochement possible between the two sides?
I always hope that there can be a peaceful solution and peace talks, but it seems to be extremely difficult. But of course, I hope that a solution can be found.
Odile Renaud-Bassot, thank you so much for joining us today. That was the president of the European Bank for Reconstruction and Development joining us. Now, coming up, Goldman Sachs offers senior staff unlimited vacation. Think about that. Think about where you'd be going and actually whether you'd be able to take the vacation. As odd as it seems, we're going to delve whether people actually take their holidays. We're just speaking to a senior banker saying, well, I have a lot of holidays I haven't been taking anyway. We delve into that next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
I'm taking inflation very seriously, and it's my top domestic priority. There are things we can do. That starts with the Federal Reserve.
I worry that the Federal Reserve has tried to be too nice to markets.
75 basis point in an increase is not something the committee is actively considering.
You know, you cannot come on TV and speak about all the uncertainties and then rule out a certain policy response, 75 basis points.
50 basis points, you know, is already a pretty aggressive move. I don't think we need to be moving even more aggressive.
It is absolutely essential that the Fed regain credibility.
We don't rule out 75 forever.
It will not do so until it does what the ECB did.
Inflation has increased significantly and will remain high over the coming months.
I must commend the Bank of England.
UK GDP growth is expected to slow sharply. Monetary policy, therefore, must navigate a narrow path.
I wish other central bankers were as honest and as balanced as Andrew Bailey was.
Well, that was Bloomberg TV guests and policymakers reacting to the MLive question, which central bank has been the best at communicating policy guidance. Now, other news we're watching, and it's also to do with the banks, but this is Goldman Sachs saying it will allow its senior staff to take unlimited number of vacation days. It's seen as the latest move by a Wall Street bank to retain talent in a heated job market. For more, we're joined by Bloomberg's finance editor for the UK and Middle East, Tom Metcalf. Tom, you were not expecting, I mean, he sat down, Tom, and he said, I was not expecting to talk about unlimited vacation days at Goldman Sachs. I mean, first of all, do bankers even take their full holiday? No.
Exactly. And this policy applies to Goldman's partners, Goldman's managing directors. So those are not the type of people you normally expect to, take, even days a quarter.
What I love is that our producers are now showing like pictures of sandy beaches and like exotic places, like remote islands. So is this just like a massive smart PR ploy?
Yeah, I think I certainly do not read this as seeing that you'll see the Goldman bankers at the beach. I think it's sort of, like you say, every bank's wanting to put forward that it's kind of, mature organization. Maybe this sort of long-standing culture of, work at the expense of everything else is no longer so sort of prevalent. But I think really the reality when you see some of these policies implemented at firms like Goldman is it's not that staff take too much holiday. It's quite the opposite. Staff take less than they originally had allocated under older policies.
Yeah, and psychologically, I mean, we were speaking to someone. Look at that beautiful beach. Tell me you'd rather be in the office.
I would rather be there right now.
At Goldman Sachs than here. I guess psychologically, it gives you more bandwidth, right? So is it better than a pay rise? I know you're not like a mind reader of the traders, but again, I guess if you have to show flexibility, but you want people in the office, you have to find some of these perks.
No, absolutely, and there's lots of evidence from surveys that this is actually something that sort of job applicants and people thinking about which firms to join, it's very, very attractive to them. And it might just be that in reality, they turn up and realize, oh, this is not those Miami beaches, this is not those sort of sun-kissed lounges. It's much more like I'm in the office more than ever because it's sort of that sort of pressure where you don't really want to take too much holiday.
I mean, this is great because you go into Goldman Sachs or another one at 20 years old, you see the beaches, you say, I'm going to work hard for 10 years, I'm going to be made, managing partner, and then I go on holiday. But then the reality is once you're at that level, you just can't take it off.
Yeah, it just never stops, right?
It's a genius.
It is.
In terms of bankers' pay, are you still seeing that race to the upside to make sure that they attract the right talent?
So, well, it's slowed down a lot, so that was pretty much the theme of all last year. I mean, it'd be interesting to see if any more of those kind of hikes come in. They were mainly for the junior staff. So what's also interesting about this Goldman announcement is for the junior staff, they have upped the holiday allowance something, so they don't have unlimited unlimited vacation, but they did get a couple of extra days. So I think we will see more moves like this, sort of on the softer side. Whether on the pay side, with markets being like they are, it's hard to know whether the banks will be the winners or have to sort of look to cut compensation.
Where are you going on holiday? Come on, you have a month off.
I will go to the English coast, I think. No travel or anything, just stay in the country.
I'm going to the Pacific Ocean, then we trade. I'm going to Tahiti. That's where I would go if I had a free month off. And then you'll be in Devon.
Yeah, exactly.
Yeah, and then we'll exchange pictures, and then the viewers can vote who got it right. Tom, thank you so much. Our Bloomberg's Tom Metcalf. Now, this is what the picture is looking like for the markets. Stocks in Europe wavering, U.S. equity futures also slipping. Traders weighing China's latest measure to support its economy after poor data fueled concerns about the global outlook. Now, Chinese data did show industrial output and consumer spending hit the worst levels since the pandemic began. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kaylee Lyons, and Anna Edwards. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the House for business's greatest minds.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
You may not lose a lot, but you're certainly absorbing a tremendous amount of volatility for taking risk in the U.S. equity market.
The fears we have today are tied to one thing, really, inflation. That is the elephant in the room.
I hope we can stabilize around these levels, but I certainly wouldn't count on us getting back to all-time highs.
The Fed has to act to show that it's serious and hope that these forces sort of kick in down the line and prevent that recession from necessarily happening.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kayleigh Lyons.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, May 16th. Our top stories today. China's economy is paying the price for the government's COVID-0 policy. Two key gauges of economic activity fell to the worst levels since the start of the pandemic. Goldman Sachs cuts its forecasts for U.S. economic growth this year and next. Former Goldman CEO Lloyd Blankfein says the U.S. should prepare for a recession. And NATO members rally around Finland and Sweden after they announced plans to join the alliance. Turkey's raising concerns, but NATO Secretary General says that won't delay the process. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons in New York. And Kayleigh, it seems that the data coming out of China overnight, negative. We'd expected a negative story, but more negative than expected. That's shaken sentiment a little.
Yeah, that data coming in much weaker than economists expected. Retail sales in China fell 11%, a little more than 11%, so a much larger decline. As you said, Anna, both industrial output and retail sales were at their worst level since the pandemic began. So that definitely created a drag on Chinese equities overnight. The CSI 300 was down about 0.8%, though overall the MSCI Asia Pacific Index still able to post a gain of a little more than 0.1%. You had some outperformance from markets like Japan and Taiwan. But of course, in the foreign exchange market, you are definitely seeing the concern around Chinese growth showing up in currencies. The Chinese yuan, the big underperformer in Asian FX today, weaker against the dollar by a little more than 0.1%, trading right around that 680, 681 level. And then I have Chicago wheat futures on my Asia board today, which is a little unusual, but the reason why is this is an India story. India moving over the weekend to halt exports of wheat to stabilize its own food security. And the interesting thing, Matt, is that India isn't even that large of an exporter of wheat, but it really goes to show you with a more than 5% price move on wheat futures this morning how critical any aspect of supply is in commodities markets, as the war in Ukraine has absolutely roiled them.
For sure, very tight supply here. This is one of the things I think that is causing futures to dip, or has caused futures to dip. We've seen them all over the place. They've been up 0.5%, they've been down 1%, and now they're off only 0.1%. So futures a little bit up and down this morning. U.S. 10-year yield coming a little higher as investors let go some of that debt, but not back up to the 3% levels that we saw last week. NYMEX crude right now is little change, but it's at $110 a barrel. So it's at the same level as Brent right now, which I think is really interesting. There's almost no spread there, or even a negative spread. And then Bitcoin down another 4%, down below that crucial $30,000 level where a lot of people say retail buyers come in and move it back up to the price. We haven't seen that happen yet this morning. Anna, what do you see in Europe?
Yeah, interesting to look at what we see there in Bitcoin, Matt, because here in Europe, we started out in very negative territory, actually, as US futures looked negative at that time of day a couple of hours ago, and European equity markets were weaker, down by 0.5%, 7/8% on some of these major markets. We turned some of that around, but some of the negative sentiment around crypto was being cited as one of the reasons. Also, that negativity from the Chinese data also weighing on risk appetite for European stocks, but not so much now. Now we see some moves higher, flat really in Germany and in France, but moves higher on the
London market. The sector picture looks a little bit confused today. So we're buying energy stocks, we're buying basic resources, buying energy even though the oil price is still a little weaker, even if it's off its earlier lows. But at the same time, we're buying healthcare and we're buying telecoms. We're buying some of those more defensive names. So quite an interesting picture on the sectors. The euro's interesting as well, making a bit of a rebound this morning, up by 0.2%. We've had governing council members of the ECB perhaps attempting to talk up the currency a little bit, saying that it does cause problems for the eurozone if the currency gets too weak. That's, of course, to do with imported inflation. Ryanair here, the share price of this discount airline down by 2.6%. Their outlook for the rest of the year a little bit lackluster, perhaps, compared to expectations. And so as a result, that stock goes weaker. Valneva is a vaccine manufacturer over in France. They had a deal with the European Commission, that an advance purchase agreement that the European Commission has flagged they don't intend to extend. It was due to be reviewed at the end of April, and it won't be extended, is the latest communication from Valneva, and so that stock moves considerably weaker. Kaylee?
All right, Anna. Well, clearly there's already a lot of action on this Monday morning, but there is still much more ahead this week, beginning with U.S. President Joe Biden, who will host the Greek Prime Minister at the White House today. We'll also get some U.S. economic data tomorrow in the form of retail sales. G7 finance ministers and central bank governors will be meeting in Bonn, Germany from Wednesday to Friday. Plus, President Biden is set to visit South Korea and Japan for a 4-day trip. That is set to kick off on Friday at the end of the week. Plus, finally, Australia will be heading to the polls to elect its leader for the next 3 years. That's coming up this weekend, Anna.
Okay, we've mentioned the Chinese data, so let's get to that. China's economy is paying the price for the government's COVID-0 policy. Industrial output and consumer spending have fallen to the worst levels since the pandemic began, and analysts are warning of no quick recovery. Bloomberg's Tom McKenzie joins us now to break down the data. Tom, the key takeaways then from this data set.
So Kaylee touched on a couple of them, but it's worth reiterating retail sales, because of course the consumer in China was so key to driving the growth that we saw last year, I was going to say yesterday, in 2021. That has totally fallen away. They have not got back to pre-pandemic levels. So you're looking at a drop of more than 11% for the consumer, for the retail space, and then factory output falling as well. Crucially, for the Chinese Communist Party, obsessed with stability as they are, the unemployment rate going above 6%, and for youth unemployment hitting a record. So where does this leave the economy going forward? Many analysts now suggesting you could see a contraction in the second quarter. That makes the GDP target they've set themselves, policymakers, 5.5% for the end of the year, very challenging indeed. We know, of course, that there have been announcements around policy stimulus. The rhetoric is good, the reality on the ground not so good. How it filters through into cities and parts of the economy that are largely shut down or heavily restricted is a key question. We've seen some cuts to mortgage rates, maybe that's going to help around the edges. So the key for the economists out there is watching the COVID-0 policies, and the mayor and the officials in Shanghai saying they hope to get back to some level of normality by mid to late June.
Yeah, and keeping an eye on the stimulus. I mean, those mortgage rate cuts I thought were not big, but still very interesting. Tom McKenzie, thanks very much for that, giving us the full picture on China. Now, Goldman Sachs, the senior chairman, Lloyd Blankfein, is urging companies and consumers to prepare for a U.S. recession. He spoke on CBS's Face the Nation yesterday.
Do you think we're headed towards recession?
We're certainly heading, it's certainly a very, very high risk factor. And there's a path, it's a narrow path. But I think the Fed has very powerful tools. It's hard to finely tune them, and it's hard to see the effects of them quickly enough to alter it. But I think they are. I think they're responding well. I think it's definitely a risk. If I were running a big company, I would be very prepared for it. If I was a consumer, I'd be prepared for it. But it's not baked in the cake.
Let's get more now with Danny Berger out of London. We had, Danny, a ton of news out of Goldman Sachs, and also a number of different institutions cutting forecasts for growth.
Yeah, the growth concerns really overtaking perhaps even inflation is the main worry of this market. You saw it last week with what risk assets are doing. You saw what Tom was describing, China data. You had U.S. consumer sentiment, the latest UMich survey coming in at a 2011 low. So the same day that we get Blankfein there talking about the risk of recession, that if you were a company, you should be preparing for it. You also had Goldman's U.S. economic team headed by Jan Hatzius also downgrading their look for the U.S. GDP. So 2.4% 4% is where they see it in 2022. It was 2.6. Now they see 1.6% next year. That's down from 2.2%. They call this a necessary growth slowdown in order to bring wage growth in check and also bring inflation down to the Fed's target. They say unemployment, yes, that will go up, but not a sharp spike. So yes, lower GDP, higher unemployment, but they're not going all out recession. Now, it isn't just a U.S. problem, as you alluded to, Matt. Arguably, and many people believe this, that Europe is likely to fare worse off. Now, the EU has downgraded their financial forecast in a recent draft that was obtained by Bloomberg. Now, to be fair, this is a draft, so it could change. However, they are significantly downgrading their growth estimates, and at the same time, they think inflation will double. This will be the first report since Russia's invasion in Ukraine. Really just emphasizes that for Europe, the recovery post-COVID is going to be a lot sharper than many expected.
All right, Bloomberg's Danny Berger with a great breakdown. Thank you so much. Now, we were talking about Goldman Sachs, and on that subject, we should also mention that Goldman is allowing senior staff to take an unlimited number of vacation days. That's according to a company memo seen by Bloomberg. Junior employees will still have limits on vacation, but they will be given at least 2 extra days off each year. Now let's turn to geopolitics. It's another dramatic change in Europe's security structure triggered by Russia's invasion of Ukraine. NATO members rallied around Finland and Sweden after they announced plans to join the alliance. The one NATO member to voice concern was Turkey. U.S. Secretary of State Antony Blinken spoke on the matter yesterday.
There is very strong consensus for bringing Finland and Sweden into the alliance if they choose to formally apply. And as to the differences between Turkey, Finland, and Sweden that have been talked about, there's an ongoing conversation, and the bottom line is this: when it comes to the membership process, I am very confident that we will reach consensus.
Anne-Marie Horder, Bloomberg Washington correspondent, joins us now from Abu Dhabi for more. Of course, she's in Abu Dhabi because she has been traveling with the secretary. And Anne-Marie, you were at that NATO foreign ministers meeting. What else can you tell us?
Well, it does seem, as Secretary Blinken said there, that, and he also said across the board, there's almost full consensus. Obviously, the one holdout at the moment is Turkey. But Jens Stoltenberg, the Secretary General, who also joined via video link to that conference, said that Turkey is not trying to block it. And Secretary Blinken said this is a process, and he did meet on the margins of this meeting with his Turkish counterpart. He didn't want to characterize or give details of that conversation, but they do seem, alongside him and the foreign minister of Germany, they do seem to think that there is a path for both these Nordic countries, Sweden and Finland, to quickly ascend into the alliance. Of course, potentially Turkey is using this moment as a point of leverage. They have come up with a few demands, but it does seem that there is potentially a pathway forward, and we do have some Swedish diplomats going to be heading over to Ankara to potentially work out some of those knots.
Anne-Marie, you're in Abu Dhabi, and there is a reason for that. Take us through what you're there for and who you're with.
So I came here with Secretary Blinken, and he's now waiting to join other high-level American diplomats. And this is going to be led by Vice President Kamala Harris, and she's flying here alongside the Secretary of Defense, Lloyd Austin, CIA's Bill Burns, climate envoy John Kerry, and this is all in a condolence visit for the late ruler of United Arab Emirates, and to meet with Sheikh Mohammed bin Zayed, most notably known as MBZ. And this really comes, as a U.S. official described to me, a showing of strength of this relationship, at the same time that behind the scenes, they've really been trying to work out some of these differences. Over the course of the year, we have seen differences in not just the UAE, but also Saudi and the United States. One is a security difference. They really do not want Washington re-entering this potential nuclear agreement with Iran, especially when you had the Houthi rebels have drone strikes very close to where I am standing right now. And then on top of that, we've also seen the Americans and other consumers reach out to these Gulf countries, especially the UAE and Saudi, that have this spare capacity to try to pump more. And that, for the most part, has been snubbed. And you have a lot of Russian money at the moment coming into this country. The UAE is allowing that. They're almost welcoming it. And they haven't also denounced Russia. So you do have a very tricky relationship at the moment. But the U.S., with this incredibly extensive list of diplomats, is sending quite a strong message about where they see that partnership going.
Yeah, very interesting stuff. Anne-Marie, appreciate your globe-trotting reporting there. Bloomberg's Anne-Marie Horton from NATO to Abu Dhabi. Now, Germany, where I know she also was at the weekend, says it will stop importing Russian oil by the end of the year, even if there isn't an agreement on an EU-wide ban. Foreign ministers from the bloc are already meeting today to discuss the next round of sanctions. This after EU diplomats floated a delay in the oil ban after objections from Hungary. Maria Tadeo, Bloomberg's European correspondent, joins us now from Brussels. And this is interesting from Germany. I mean, it seems like they're trying to put up a bigger front after the ruling party lost another big, in fact, the biggest election in terms of state elections in Germany over the weekend.
Yes, Matt, there's the politics of it, but then there's also the catching up to reality. When you look at the numbers from Germany, you look at the imports of Russian oil into Germany, they've majorly declined ever since the war started. It was 35% of imports before the war. Now they're around 12%. So you can see here that for Germany, it's not that big a deal, especially if you compare it to gas. And what they're trying to do now is, of course, to inject some political momentum into this package. It's been 2 weeks that we've debated this situation, and still there's no deal, an EU27 deal. They now say, well, if Hungary and other countries in Eastern Europe are not prepared to do this, we're just going to do it by ourselves. But I would look at the numbers and say, overall, this is not the big deal for Germany. It really is gas. Now, the other thing, just to pick up on what Anne-Marie was telling you before, I did speak with the Spanish foreign minister, who is, of course, the host for that big NATO summit that is scheduled to take place in June. That is, of course, my home country, but also the host nation for this. And he told me, you know, I expect this to be historic. By that moment, in 2 months' time from now, potentially a month and a half from now, we will see 2 new members. He was absolutely convinced about this. He did say Sweden and Finland will join NATO, and this is such a watershed moment for European defense. This is the opposite of what Vladimir Putin was aiming with this invasion of Ukraine, though.
All right, Bloomberg's Maria Tadeo, thank you so much, as always. And don't forget, don't miss Maria's exclusive interview with Ukrainian Foreign Minister Dmytro Kuleba. That's coming up in the next hour from Brussels. Now let's get back to the market and take a look at some stocks moving in pre-market trading here in the U.S. A big outperformer to the upside today is Spirit Airlines. Remember, there's a bit of a tri-player saga going on in that first you had Frontier coming out with a $2.9 billion to buy Spirit. Then JetBlue came in and topped that with a $3.6 billion offer, equal to about $33 a share. Spirit rejected JetBlue's offer in favor of Frontier's. Now JetBlue coming in with a $30 per share tender offer for Spirit. So you are seeing a big lift to that stock at more than 18% in pre-market trading at the moment. It's trading around $20 a share, so still about $10 south of that price. We'll have to see where that one goes. Another stock that is moving higher in a pretty substantial fashion this morning is Carvana, out after the bell on Friday with a new plan talking about raising free cash flow. Analysts seem pretty positive on it, so that stock is up about 9.6% this morning. But remember, it's down about 89% from its peak last year. And another group of stocks to pay attention to this morning is casino operators, specifically those that have operations in Macau, because of that China data out overnight, as we've been talking about multiple times already this hour. You are definitely seeing the likes of Las Vegas Sands and Wynn lower, and you also have Twitter lower on the day today. I really don't know what is happening with Elon Musk's offer for the company at the moment. A lot of confusion sown around that on Friday. Clearly, investors have some hesitation because it's trading at $39 a share in early hours this morning, about $15 below Elon Musk's offer price, Anna.
Yeah, ever further from the offer price then. Kaylee, coming up on the programme, we'll talk to Alan Curtis, head of UK equities at Lazard Asset Management. Alan Custis, sorry, we'll talk to him shortly. Is the UK a poster child for stagflation, or are slowdown in the economy concerns overblown? We'll talk about that, and also later on crypto. Diana Biggs joins us, DeFi Technologies Chief Strategy Officer, plus predicting Terra's implosion. Read today's big take story about the crypto hedge fund manager who saw it all coming. Just type NI Big Take into your Bloomberg terminal. This is Bloomberg.
has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on both radio and television. I'm Matt Miller in New York with Kaylee Lyons, Anna Edwards with us out of London. And my friend Kriti Gupta joining us today. I don't know what her chart of the day is going to be, but I have a few suggestions.
Throw them at me.
One is just the S&P getting to its 200-day moving average. It hasn't been there yet. But if you look back over history, any of the big drops we have coincided with, you know, the lockdowns there at the very end of the chart. Then you see some growth concerns. You see a sovereign debt crisis, the great financial crisis. We haven't gotten there yet, so maybe we haven't capitulated.
Yeah, I don't think we have. And I don't think I'm alone in that. Panic selling doesn't seem to be a part of the conversation right now. It does seem to be a restart or a reset, I should say, in stock market trading. And that's why these technicals that you point out are so important, because you are in an environment where you have high volatility and low liquidity. And that really means that you need a roadmap to trade those. There's a historical kind of precedent that I want to point out when you look at what the stock market is doing right now. And that goes all the way back to 1962. For anyone who is up to date on their 60s, stock market history, you'll know that they actually had this thing called the Nifty 60s, where a group of high beta stocks, essentially IBM, Xerox, essentially the Apple, Microsoft of the time, rallied and then basically had a 9-month slide, and it didn't recover until the end of the Cuban Missile Crisis, which really came out and said it was a question of more of just a reset of growth that you saw over the previous 10 years.
Is it a reset of growth and a reset for a specific sector then? And do we not see the breadth just yet? Kriti, thank you very much. Bloomberg's Kriti Gupta with us on the markets. Remember, you can get more market analysis. MLIV Go is the function to use for the Markets Live blog on your terminal. This is Bloomberg.
companies know they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Keeping you up to date with news from around the world, here's the first word. The U.S. Justice Department is investigating a mass shooting in Buffalo that left 10 people dead and 3 wounded as an act of racially motivated violent extremism. 11 of the people shot were black. An 18-year-old white man was arrested, and officials say he posted a hate-filled document online not long before the attack. British Prime Minister Boris Johnson is warning the EU that changes must be made to the Northern Ireland Protocol. He's unhappy about the call for checks on UK goods crossing the Irish Sea. Johnson says his government may act on its own if the EU doesn't engage in genuine dialogue. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. will be also great to look at, because majority of the studies done, uses a small sample number, and most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. China's economy is paying the price for the government's COVID-0 policy. Two key gauges of economic activity fell to the worst levels since the start of the pandemic. Industrial output unexpectedly fell 2.9% in April, while consumer spending shrank by 11.1%. Goldman Sachs cut its forecast for U.S. economic growth this year and next. The new outlook reflects the shakeout in financial markets and higher interest rates. Goldman sees the U.S. economy growing 2.4% this year and 1.6% in 2023. The former Goldman CEO Lloyd Blankfein says the US should prepare for a recession. And it's another dramatic change in Europe's security structure triggered by Russia's invasion of Ukraine. NATO members rally around Finland and Sweden after they announced plans to join the NATO alliance. Turkey's raising concerns, but NATO's Secretary General says that won't delay the process. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. And Matt, European equity markets really retreated at the start of the trading day, sentiment taking a knock from the Chinese data. We seem to be working our way through that, though, and looking for future direction.
Yeah, it's interesting, I think, that you're coming back a little bit and that we're not seeing bigger drops here. You know, we have futures down about 1/3 of 1%, but earlier in the session, they were down almost 1 full percent. Now, there's so much bad news out there. As you say, the Chinese economic data not good. The ECB is expected to lower its growth forecast for the EU, and Goldman Sachs has lowered its growth forecast for the US, and as you pointed out, a senior chairman said get ready for a recession. Nonetheless, we don't see huge moves here, and investors are willing to let go of some 10-year debt. So I think that's really interesting. We're not back up to 3%, but we're starting to rise a little bit in terms of the yield. NYMEX crude right now down a little bit, but still over $110 a barrel, and Brent's only at 111. So that spread has really come in. And then Bitcoin holding below a crucial $30,000 level. This is a retail level. Obviously, it's a round number, but whenever it drops, retail investors, at least historically, have said that's a chance to buy. And there are also big conspiracy theories about whales driving it down to 30 and back up to 50 and sort of playing a game with it. But Kaylee, what else do you see in the pre-market movers?
Well, I'm really focused on the ripple effects of that weak Chinese data we got out overnight and that Anna was just mentioning, because of course a big part of that was consumer spending at its lowest level since the pandemic began. Retail sales dropping more than 11%. And that doesn't necessarily bode well for discretionary spending and maybe people wanting to gamble in Macau. You are definitely seeing that showing up in the stocks of casino operators that have big operations in Macau, the likes of Las Vegas Sands and Wynn Resorts, each down in the ballpark of about 3% this morning. You also have some pressure for the Chinese technology stocks listed here in the U.S. The ADRs of Alibaba and Baidu.com are each down about 1.25% in early hours, Anna.
Yeah, Kaylee, here in Europe then, after early nervousness, we managed to claw our way back to flat, essentially, and we're pretty much there, down 0.1% on the stock 600, so waiting for further guidance. It's going to be a really busy week when it comes to data. The UK consumer, UK inflation picture will get clearer. We'll also get data on the US consumer, really crucial after that Michigan sentiment number. So all those big picture data points going to be front of mind for investors. The euro is up 0.1%. We have heard from some ECB officials just this morning, governing council members, was trying to perhaps talk the currency up a little bit, saying, underscoring the difficulties that are created by a weaker euro for that economy, especially when they're trying to tackle inflation headwinds. Ryanair is down by 3%. This is a low-cost aviation business, of course, based in Ireland. The stock down by more than 3%. Their argument is when things get tough for the consumer, then customers trade down, but investors maybe not quite so impressed by the forward guidance we got from this particular business than they had been expecting to be. Valneva is a French pharmaceutical business. That stock down by 20%. There had been an advanced purchase agreement with the European Commission around COVID vaccines. Well, that looks as if it's not going to come to pass now, and as a result, the stock reprices, Kaylee.
Yeah, in a big way. That was a massive move for one of those micro stories. But of course, at the macro level, it really seems that the focus has migrated from concerns around inflation to concerns around growth. That is evident in what we saw out of China overnight in the U.S. Growth forecast cut from Goldman Sachs, Matt mentioned, as well as the downgrades to Europe's growth forecast as well. And in the UK, you have a Bank of England warning about a deteriorating outlook at the same time that it is willing to hike into weakness in order to stem inflation. Alan Custis, Lazard Asset Management's head of UK equities, is joining us now for more. Alan, how does that shift your view on that market in particular?
Yeah, good morning. I don't think it shifts us in particular. I think the Bank of England has been behind the curve in terms of catching up with the impact of inflation. But I think here in the UK, it feels like inflation is starting to peak. We think there's clearly going to be some more increases from the MPC, but we think perhaps the sort of 2.5%, which is what commentators are suggesting that interest rates get to in the UK, may be a little bit too much. And I think that as we move into 2023, clearly we'll have a base effect on inflation. And I think some of the heat may start to come out of that debate.
Alan, good to speak to you. Good to see you in studio here. Is that what you're seeing then in the UK, that we're peaking on inflation? Because the Bank of England and maybe some other commentators also suggesting that maybe inflation goes up again or doesn't really dip much during the summer and goes up again in the autumn, in the fall, because of the way that prices for energy markets in particular are controlled here in the UK. So is there a danger that we stick at really high levels of inflation here in the UK?
Yeah, I think there is that danger, but I think there are exogenous factors that are driving it at the moment. We talk about the energy price, we talk about wheat prices, general soft commodity prices. Clearly there's an exit route there which could happen over the course of the next 12 months. I think as we roll into 2023, then the sort of 8, 9, 10% inflation numbers that we're currently looking at, yes, they could go up a little bit in the short term, but I think as we roll forward to 2023, clearly the numbers are going to be a lot lower, which is then going to give a little bit of sort of wriggle room, I guess, to the MPC in terms of where ultimately interest rates will get to.
Do you find really constructive reasons to be excited about UK stocks at the moment, or is it all about exposure to energy and structural, the structure of the market, rather than excitement around the underlying assets, perhaps, and also the weakness in sterling maybe is good for some of those big businesses?
Sure. No, I think that's an argument that a lot of people have talked about. If you think about energy, mining, banks, 22% of the index. So you've got another 80% of the index that actually in a lot of places has held up quite well. I mean, I think about last week, you had Compass Group, for instance, guided upwards.
Global catering business.
Yes, guided upwards. There are a number of instances of companies like WPP that guided upwards. We're generally seeing some actually very positive profit expectations from companies at the moment. But at the same time, they are clearly, very cognizant of what's going on in the wider economy. But at the moment, trading actually for some of these global businesses, we've always said, equities are great for hedging against inflation. They really are bringing some inflation to play in terms of the P&L.
Does it concern you? Boris Johnson's government wants to rework unilaterally the Northern Ireland Agreement once again. Does this lingering Brexit problem concern you for UK equities?
Yeah, no, absolutely it does. I mean, having managed money since the referendum vote in 2016 and the impacts that had on investors' perception of UK equities, we were hopeful that we kind of put that issue to bed. And this clearly just reminds us that this is not the case. What I would say is that when we talk to companies about the issue, it's not first and foremost. Clearly, since then, we've had the pandemic, we've had the supply chain issues, We've had the Ukraine conflict. So there are a number of issues that are of a sort of higher priority. But when I talk to my clients, I always say to them, just to remind you, you know, that the Brexit situation has not gone away. And this was what I was concerned about, that it could come and rear its head again in the absence of other news, I guess.
Has there been any change, Alan, in the way your clients are investing, your UK clients are investing outside of Great Britain?
I've not noticed a change. There still is a move towards global. I think that there may also be a move towards maybe more relative value rather than the very strong, growth-orientated or ESG-orientated flows that we clearly saw over the last few years. So I think clients are sort of pondering a little bit whether relative value, whether ratings on some of these high growth stocks still have some ways to fall, and whether relative value is a factor or a style that they should be embracing.
Alan, thanks very much. Thanks very much for joining us. Alan Custis of Lazard Asset Management. Coming up on the programme, we'll also talk crypto, and that's with Diana Biggs, DeFi Technologies Chief Strategy Officer. That conversation coming up next. This is Bloomberg.
Traders, how are you doing today? Please place an order to sell short British pound against United States dollar. Okay, guys. So the price I'm looking to sell 122.30.2. So if you want to trade British pound, please place your order, and as you can see, position open right now 122.30.2. Okay. If you still have, as I can see, a chance to place your order. In our case, we already opened position. If you want to copy this trade, please do so. Otherwise, you can get the strategy from company.co.uk and stay with me. Follow my trades, and we will make profit on British pound. Probably, hopefully today. Okay. I'll speak to you later, guys. Stay safe.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Labour. That's at 6 a.m. in New York, 11 a.m. in London.
The thing that we hear from investors is really not so much about timing. Most of the investors who are putting capital into crypto these days are doing so over longer term time horizons. So they're not necessarily going to be deterred by volatility. In fact, they know it comes with the market and comes with the territory.
That was Grayscale CEO and big-time Bitcoin holder Michael Sunshine speaking to us earlier. A sell-off in cryptocurrencies has accelerated, though, today. Bitcoin dropping back below $30,000 a piece. Weak Chinese economic data, dented appetite for riskier assets, and, of course, something like Bitcoin is highly correlated. Now, for a long time, Luna wasn't. It was like a hedge against the problems in the rest of crypto. But as it drops closer and closer to zero, the failure of the entire Terra USD stablecoin experiment has prompted concerns. Joining us to talk about that is Diana Biggs, Chief Strategy Officer of DeFi Technologies. Diana, thanks so much for coming in. The the success of a stablecoin, especially one that isn't connected to fiat currency at all, is so important to the future of DeFi. What does the failure of Terra mean for the entire universe?
Absolutely. So stablecoins are an integral part of DeFi and will continue to be incredibly important for this ecosystem. That being said, of course, not all of these projects are created equal. And so what this absolutely highlights is the need for effective regulatory engagement from the industry in order to understand the nuances between different types of projects and how they are set up, and to understand how these work under different market conditions as well.
But in these kind of market conditions, are we seeing a mass deleveraging? And I'm wondering if that spirals, if there is some kind of systemic risk at play here.
You know, it's incredibly difficult to predict what will happen in the coming weeks or months. What is quite unique to this ecosystem, of course, is the fact that it does happen in open public blockchains with the transparency, observing governance in real time, and having the ability to watch all of that happen. So far, I think, you know, rather than it being the instance that created this, rather what we're seeing is how it does play out during these market conditions that are affecting it now, rather than having been the cause of those.
Well, and these market conditions clearly haven't just affected stablecoins. It's really rippled across all digital assets, and if, as Matt said, Bitcoin back down below $30,000. How much lower can it go realistically if this is a winter type scenario?
No, absolutely. As we see in all sort of down markets, there will be winners, there will be losers. Certainly, we are very optimistic in the long term about the potential for these technologies, and therefore feel quite confident about how the strongest projects will fare, especially during this time where they're able to focus on building and really creating real utility and efficiencies in the markets, which we're seeing happen.
Diana, good morning. I mean, you talked there about stablecoins and the role that you think they will play, and they're not all the same. They're very different. Some of them, of course, are excuse me, asset-backed. Do you think it would be helpful to have more disclosure around the types of assets that are used to back these stablecoins and what exactly is held? Would that help to add confidence to the markets, do you think?
I think absolutely, absolutely. With that type of reassurance, it will be able to have the security that investors will then be able to hold out from fears and continue to have the trust in the markets that's necessary to really fulfill their promise of being a hedge against that volatility.
And you talked about regulation as being something that could help here by underscoring the differences between the different types of stable coins, for example, or helping people better understand the risks they're getting into. A lot of people in the crypto universe or DeFi maybe don't talk about regulation in that context, but is it possible to find that landing zone where regulation is really helpful in keeping people on top of what is going on in these markets?
Absolutely. Effective regulation will be incredibly critical for the industry, for Web3 overall to grow. Recently, we did co-lead an EU initiative where we were engaging with regulators in order to ensure the proper balance between the opportunities for growth and innovation that these technologies can provide, while ensuring, of course, consumer protection.
Diana, what do you think happened with Terra? I recently heard someone comparing one possible theory to George Soros breaking the Bank of England. Do you think there was a coordinated attack or some bad player that wanted to bring the whole thing down?
So that I don't have an answer to, but certainly, you know, this was a system that was tested during these market conditions. That could have been with intention or without. It's very difficult to say.
All right, I just think pretty fascinating collapse there. Diana, thanks so much for joining us. Diana Biggs is the Chief Strategy Officer at DeFi Technologies. Be sure to tune in to Bloomberg Crypto Tuesdays at 1 p.m. New York time, 6 p.m. in London. Tomorrow we're going to hear from Joe Lubin, co-founder of Ethereum and founder of Consensus. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Well, let's head over to Wall Street. Hedge funds will disclose first quarter investments in 13F filings after the market closed today. The filings will show how hedge fund managers positioned themselves as the war in Ukraine, rising interest rates, and price pressures roiled markets. Shonali Basic, our Wall Street correspondent, joins us now for more on what to expect. So, Shonali, I think we're all going to be looking at the Tiger Cubs because we know they've had a really rough go of it so far this year. Yeah. They held a lot of tech. The question is, do they still?
Yeah, that's the big question. The Tiger Cubs are certainly ones to watch. Chase Coleman at Tiger Global, D1 Capital, we want to watch Dan Sundheim. Melvin Capital, after they've announced that they wanted to restructure and really kind of start over and really make investors whole again after a couple of years of very tough performance since the GameStop saga. So what's going to happen when you look at the names themselves? Remember, Kaylee, when you look at the equity funds this year, by and large, most of them are in the red, according to Bloomberg's hedge fund index. You can look at that at HFGo. There's only a few types of funds that have really done well, and that includes certain types of merger arbs, activists, CTAs, trend followers, the likes of Cliff Asness if you followed value trades. But if you were long short in this market, it was really hard, and even shorting in many cases can be very difficult.
We'll always be keeping our eye on the Tiger Cubs. Not just because of their horrible performance this year, but because of their great performance before that. Exactly, yeah. What are the other funds we should be watching?
Well, we like to watch family offices as well, the likes of Soros Capital, Stan Druckenmiller as well. So we do like to watch funds that are outside of the hedge fund world because they've gotten so big. We also like to see what the difference is between the hedge funds and the pension performance because they actually don't often go the same way. You have pensions also invested in hedge funds, so they like to diversify in that pocket away from hedge funds sometimes. So you see different bets, maybe overweight in technology sometimes when you come to the hedge funds and a little bit more defensive.
By the way, I mean, we don't have to watch Archegos anymore in terms of its performance. Yeah. But it just brings to mind the fact that you don't always know what big bets they're placing, right? I wonder if a lot of these other family offices maybe had gone down that road a little bit and have reversed course.
Yes, that's a great question.
Since the criminal trial started.
Listen, if you look at the broker-dealers' balance sheets, hedge fund leverage is still near record highs. I mean, it's pretty high still. So the question is, in those stories you're all seeing about that amount of deleveraging, you could still see from here is pretty significant. And the question then becomes, you look forward into the next quarter when you look at the banks and the prime brokerage activity, did there have enough dry powder on the side in the hedge fund industry to be able to play these markets through?
Shonali, good morning, it's Anna. I want to take us in a slightly different direction, but still very much sticking to the Wall Street beat, and that is this news around Goldman Sachs allowing senior staff to take unlimited vacation. And that's pretty interesting, and that's maybe similar to what we've seen in other sectors, in tech, for example. But what really interested me is the firm saying that it expects staff to take at least 15 days of vacation, of holiday a year. And it seems to me that that's really quite important. If what you're trying to do is actually bring about some kind of culture change, then you need to put in a minimum bar.
Yeah, it's really interesting because on one hand, you do see this happening for the senior staff. There is a great push on Wall Street. You're seeing Goldman Sachs, Morgan Stanley moving along the ways of providing different sets of benefits, more benefits to their employees. But a point that, we were just talking about in the commercial break is that unlimited vacation days can be tough for some folks because it comes to be that every day ends up being a negotiation with your managers to be able to get those days off. So you do see a divergence in thinking here from the different tech firms, banks, on how to go about this policy. On one hand, it sends a signal to employees that they have a little more flexibility, especially if they're doing a good job.
The signal, you know what? The signal I hear is we're doing this for perception so that the public thinks we're nice, but you're going to take fewer vacation days when you get unlimited.
Potentially new hires also, knowing that it is an option when you have this very fierce war for talent in the banking industry and really in financial services at large. You've already raised what people are paying, salaries, bonuses, etc. So I guess now they're looking for more creative options as well to attract that talent.
And by the way, this year is not supposed to be as good as last year in many regards. Some desks might do very well, like certain trading desks at Goldman, which have completely blown it through the water. But again, if you're working that harder, you're going to take the time off. I think, that ends up being a conversation with your managers at the end of the day.
Shonali, thank you very much. Bloomberg, Shonali Basak. I mean, Matt, what do you think? You've worked on both sides of the Atlantic. Is there a bit of a sort of transatlantic divide on this story?
Yes.
In Europe, there isn't so much an expectation that you don't take your holiday. In Europe, you get holiday allocated, and there's much more of an expectation that you take it.
I think in Europe, it's considered civilized to take your vacations, honestly. And there is a real appreciation for the idea that you may do better at work if you have more of a life balance. In the U.S., that is not the case. They want butts in seats, and they want you working all the time. So that's just how it is. Especially, on Wall Street.
So much.
Am I wrong?
Yeah.
Am I wrong about that?
You're not
I'm not wrong. Okay, yeah.
He's not wrong. Okay, early edition surveillance. That's it for the early edition, sorry. Surveillance is ahead. They'll be keeping you up to date with what's going on in Ukraine. Talking to the Ukrainian Foreign Minister, and Mark Esper, former U.S. Defense Secretary, joins them as well. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Damage is done. The pricing of the yield curve reflects a Fed that is going to do a lot.
How much of the financial sector is actually going to have problems as rates go up, as rollovers become more difficult?
Everyone's looking at this as, is it a cycle-ending bear market? I look at this more as a normal correction.
Our big issue is how little tightening is priced for next year.
The Fed is effectively trying to thread a needle wearing oven mitts blindfolded. It's going to be really tough.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Here come the downgrades from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures little changed here, down about 0.4% on the S&P TK. A ton of downgrades over the weekend.
Yeah, a lot of adjustment over the weekend, and it really sets up what to me has been a clumsy Monday. John, the tape is one big churn as well, but I would suggest we're going to get some really important data today, this week, I should say, and part of the downgrades is how is the spirit of America? Retail sales tomorrow is not a small item.
Looking ahead to retail sales with a squeeze on consumers continuing. The call from David Costin over at Goldman. We can take a 3-month call and a year-end call. The year-end call is 4,300, down from 47. The 3-month call is 4K. The reason being for David Costin at Goldman, I think this is important, Tom, higher equity prices in the near term would ease financial conditions, and that would go against the Fed's goal of slowing economic growth. Read between the lines here, TK. This Fed wants equities lower, wants financial conditions tighter.
Well, like Megan Green said in the opening, they're threading a needle, and it's real simple. We will have to see what they do. What I would focus on, John, is financial conditions have tightened. The Bloomberg Financial Conditions Index down almost 1 standard deviation, 0.95. The markets are getting it done for Chairman Powell.
Looking ahead to the data later this week, we have to look back to the data out of China as well, Bramo. The data out of China was absolutely dreadful. Now, how do you look at it? The data behind us, which is bad, or the fact that Shanghai is slowly reopening now? What do you focus more on?
Clearly, there was more of a focus on the slow reopening of Shanghai and the possible concession of loosening some of these zero COVID policies. I have to wonder whether people can still stick to their forecast for how much GDP can really expand in China, given the fact that they had more than 11% contraction in retail sales versus some 6% contraction that was expected. This is beyond what people had expected. And these are the official numbers, right? I mean, you just have to wonder, going forward, how much of a hit we're actually going to see coming out of China.
The economists aren't catching up, they're catching down.
Exactly.
And Citi, the latest this morning, Lisa, they go with 4.2 for 22 GDP growth in China. That's a downgrade from 5.1. That is a chunky downgrade for Chinese growth.
And Leland Miller would say that it should be probably a whole lot lower than that if you take a look at absolute growth. But how does this factor into a global economy that's looking for nodes of green shoots, looking for nodes of momentum? The U.S. is supposed to be that. This prolongs the supply chain disruptions, which is really problematic for that consumer. Goes to retail sales, goes to Walmart, goes to Home Depot, all of these coming out this week.
I'm not picking on any bank in particular, but when the South Side starts to downgrade Chinese economic growth, Lisa, I think that 3 handle is so sensitive for so many banks, because let's face it, there is a belief on Wall Street for market participants that when a bank downgrades Chinese growth, there's a worry about access to Chinese markets and Chinese business, Lisa. The fact they're going down to the low 4s, I think it's a big deal.
I think that's important to point out, that we have seen this time and again of analysts getting called out, even recently with one bank in particular, with analysts getting called out for saying that certain stocks, tech stocks in China were uninvestable and then reversing their call. It just sort of highlights the political tenuousness of this particular area.
I think that same analyst upgrade Chinese tech.
Exactly, just overnight.
Just for what it's worth. Read between the lines. Futures down about 0.4% on the S&P this morning. Good morning to you all. On the NASDAQ, we are negative 0.6%. We have had 6 straight weeks of losses on the S&P 500 and the NASDAQ. Going into last week, the 10-year yield had been climbing for 5 straight weeks, and then something changed last week. Yields dropped on a 10-year, just a little bit higher on the session today, up a basis point. Bramo 293.12.
And here's why. People are downgrading the perspective for the consumer. Everyone's been saying the consumer is so strong, but for how long? 8:30 a.m., kind of quiet today on the data front, but we do get Empire Manufacturing data coming out, giving us the first read on May. How much do we get a repeat of what we saw from the Consumer Sentiment Survey of University of Michigan that we got on Friday that came in unexpectedly much weaker than people had expected, to the lowest levels going back to 2011. How much do we get ongoing kinds of dissonance here, ongoing signs of weakness amid some of the high material price inflation as well as some of the supply chain disruptions? 8:55 a.m., New York Fed President John Williams is speaking at a Mortgage Bankers Association event. After retail sales, we do get a lot of housing data later in the week, and this comes as mortgage rates are rising to the highest levels going back to 2009. How do we start this starting to bleed into some of the momentum that we're seeing in house pricing as well as just the volume of sales? And at 9:45 a.m., we get a news conference after the U.S. and EU Trade and Technology Council, TTC, meet yet again. They met again in September to discuss how to deal with things from export controls to chips shortages. Among the people who are going to be there, Gina Raimondo of the U.S. Commerce Secretary and Valdis Dombrovskis of the European Commission and Margaret Vestager also of the EC. I do wonder, John, how much we get some sort of close alliance between Europe and the U.S. They talk about this being a Russia issue, but how much has this really become a China issue?
Lisa, thank you. Thank you very much. TK, just on Russia quickly, some detail on McDonald's exit from the country. They're beginning the process to sell their Russian business, pursuing the sale of the entire Russian portfolio. I understand also, Tom, based on these headlines, they'll retain some trademarks in Russia too. Let's see how that works out.
You know, it's again the corporate exit, and there seem to be behind, but again, it's very complex. And to all of these corporations, and I think I can speak for 19,000 employees, John, at Bloomberg, you got to keep in mind your employees in Russia, and that seems to be the working effort for McDonald's and everyone else. I mean, how many employees does McDonald's have in Russia? You can't just walk out.
Don't make a habit of speaking for the entire employer base.
No, I'm not, but John, I think this is something, people think it's just easy. You get on a plane with a suitcase
no, of course.
and leave Moscow.
No, it's easy for us to read the headline. Of
yeah.
course, the work behind the headline is
really,
incredible.
really difficult. And you know, I mean, it's an ongoing story. To me, the Russian story over the weekend was Ukraine put up a sign on the Russian border and said, this is Ukraine. That's one of the reports we're getting there. It's, you know, unreported, but nevertheless, it's in the military gossip of the weekend.
We'll catch up with the foreign minister a little bit later this morning, Tom. Let's kick off the program today with Christian Nolting, the chief investment officer at Deutsche Bank Private Bank. Christian, 6 straight weeks of declines in the equity market in America. Christian, when do you buy this? When do you make a move?
Yeah, fortunately, we have been underweight equities, and honestly, we are now thinking also of coming back at least to going to a neutral position because we are seeing so bearish signs in the market. There's probably no change to zero COVID policy. There's still supply chain issues, so everything is super bearish if you look bull-bear index. So I think it's time to go back a little bit to neutral, but very important, it doesn't mean that we are now getting super optimistic, right? The environment is certainly a tough one, to be very honest.
Christian, Ben Laidler's out with a note this morning where he basically says a lot of companies didn't get the crisis memo. And you see that with the great separation, which I'm sure you see as well. How does profit matter going forward?
Yeah, if you look at the markets and you analyze the market movement of, for example, the S&P or here in Europe, I think what's very interesting in the recent weeks, also including this last 6 weeks, you've seen that very, very high correlation of indices to real rates. I think that's important. There's the inflation component. It has not been so much about the results of the companies. I think that might change down the road. For example, if you have the Q2 earnings season coming in then in July, I think, of course, there will be a lot of focus on how much margin pressure was there or is still there because of inflation. So I think there's a change. But if you look recently at markets, this was certainly driven by inflation and real rates with that.
So, Christian, you are underweight equities, but you are starting to get a little bit more constructive, even as you see the prospect for recession continuing to climb over the next 12 months. Can you parse through how you can be bullish on equities heading into a recession?
No, I'm not saying I'm bullish on equities, but I'm saying we have been underweight equities, which was certainly right call. And you have, even in bear markets, even recessionary markets, we have one of the strongest rallies sometimes in markets. And I think if sentiment is so negative, there is some room, even in a recessionary environment, for some market upside you don't want to miss. But it's not that I'm saying you get overly optimistic, you do know massive overweight in equities. I think that's not the economic environment we are in.
Christian, it sounds like you want to go back to neutral. So let's talk about that. Where would you buy to achieve that?
Well, markets which are mostly underweight was the US, was also China, for example, and there's a lot of discussion, of course, on China. I don't see immediate change. Look at the results or the numbers we've seen this morning in China. I've called colleagues in China. The sentiment is extremely bearish. No change to zero COVID policy. But if you look longer term, right, the market is down more than 35% since the peak. I think if you at least go to a more neutral position, that cannot be wrong. If you buy something 35% lower, not overweight, but go to neutral, I think that's the direction we want to go.
Christian, wonderful catch up, sir. As always, Christian Nalting of Deutsche Bank Private Bank. TK, the view there, it seems to be that the data is about to validate what we've already done. He's looking to get ahead of that.
There's 14 different opinions out there, John, right now. We're going to have a whole bunch of people to frame out what those different opinions are. But the immovable separation right now, which you always get in a pullback, and I know the partition, John, is value and growth, but it's much more profit or story. And I really wonder how they're going to separate out profit-making, EBITDA-making companies versus ones that have a story. I was on my Peloton this weekend, John.
How did that work out?
I was thinking about it, Well, I didn't get in my 1,000 steps, so I got on the Peloton. And, there's Peloton stories, story stocks. How are they doing, John?
Companies that might not survive. Companies that might be bought out. Companies with massive market caps 2 years ago, Lisa, and now not so much.
Yeah, but how do you paint the story for the likes of Twitter, for example? How do you paint the story when you've got things whipping around based on specific points? Or the fact that Peloton, yeah, it's a story stock having to do with the pandemic, but people were saying that it was the story of, again, Sex and the City in that episode. I keep saying, I know it's not
about stories anymore. It's about making money.
Yeah,
it's about profits. It's about bottom line. It's not about hopes and dreams. It's about the future. It's about real things.
Just crushing people's hopes.
I'm saying this smiling. I'm saying this smiling. If you're listening to this on radio, I'm not being serious.
It's just your hopes and dreams don't matter.
You did the Pharaoh cam then.
Time to have welcome to reality.
The future's down a third of 1%. I'm just sitting too close to Bramo. We need to fix it. From New York, this is Bloomberg.
Yeah, we do.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. It's another dramatic change in Europe's security structure triggered by Russia's invasion of Ukraine. NATO members rallied around Finland and Sweden after they announced plans to join the alliance. The one NATO member to voice concerns was Turkey. The country is unhappy that Sweden and Finland have had relations with Kurdish militants active in eastern Turkey. China's economy is paying the price for the government's COVID-0 policy. Two key gauges of economic activity have fallen to the worst level since the start of the pandemic. Industrial output unexpectedly fell 2.9% in April, whilst consumer spending shrank 11.1%. Economists at Goldman Sachs have cut their forecast for U.S. growth this year and next. The new outlook reflects the shakeout in financial markets and higher interest rates. Goldman sees the U.S. economy growing 2.4% this year and 1.6% in 2023. And McDonald's is leaving Russia. The fast food chain will sell its entire portfolio in the country following the invasion of Ukraine. McDonald's said that continued ownership of the business in Russia is not consistent with the company's values. And JetBlue has begun a roughly $3.3 billion hostile takeover attempt of Spirit Airlines. It launched an all-cash tender offer and is urging Spirit shareholders to vote no on the airline's takeover by Frontier Airlines. The JetBlue offer is $30 a share, $3 less than its initial bid. JetBlue says it would pay the higher price if Spirit agrees to a, quote, consensual transaction. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. It's a great question. Great question. Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Stagflation, unfortunately, is the baseline. We're going to see notably lower growth, and we're going to see frustratingly high inflation for this year and into next year. Whether we get something worse depends on the soft landing debate for the Fed. I do think that the left tail of recession is something that we must keep an eye on.
My newest co-anchor, Mohammed Al-Erin of Queen's College, Cambridge. On set in a studio last week, Tom. He was absolutely fantastic. He read a tease, go into break, ask guests questions too. It was perfect.
It was great. He ignored me.
My newest co-anchor on Bloomberg TV and radio.
Didn't say hi.
It's working out. My newest co-anchor on Bloomberg TV and radio.
Wore a green bow tie just in honor of the Jets. And
got to work that out, Tom. Got to figure that out.
I don't know. Futures negative 13. We're steeled here for a really interesting week. Again, in the markets, and I would note dollar here with what I'm going to call dollar resiliency this morning. Right now, we are going to go to Brussels. He is not only a foreign minister for Ukraine, but from a family of public service to Ukraine. His father was ambassador, including a long tour of duty to Kazakhstan. Maria Tadeo with Mr. Kuleba in Brussels. Maria, good morning.
Yes, Tom, good morning. And we're now joined by Dmitry Kuleba, who, of course, is Ukraine's foreign minister. And when this war started, you, alongside the rest of the Ukrainian government, you made the decision of we're not going to leave. We're going to fight for our country and we're going to win this war. I wonder, now you've been on almost a global tour. You've met pretty much with everyone that can support your cause. What is the message that you're sending diplomats when you go on this tour?
You did not believe in Ukraine. But now you can see that Ukraine will win this war. Stand by us and share the victory with us for the sake of the world. Because this is not only Russia's war against Ukraine. This is the threat that Russia and the challenge that Russia poses to the entire world. We have to stop them here in order for others not to suffer as much as we do.
And one of the things that you say, and President Zelensky repeats too, is that when you look at the strategic options right now, the only strategic option that works for Ukraine is winning, is a victory. Nothing else will suffice. When you say we got to win, what does it mean in real terms?
Well, you have to understand that this is the war for our existence, because President Putin does not recognize our identity. He does not recognize the right of Ukrainian state to exist. This is why we understand that we have no other choice but to win this war, because it's a war for our existence. And winning it means first deoccupying our territories, restoring territorial integrity of Ukraine within its internationally recognized borders. We have no intention to capture anyone's piece of land, even an inch of it. But we want everything that belongs to us to be ours.
And of course, you often hear, and I know this really makes you angry and infuriates Ukrainians when you hear things like, oh, but they should just accept a ceasefire, or perhaps just give away the Donbass, and this will put an end to it. What is the flaw in that theory, according to you?
One of the reasons why this war is happening is because since 2014, some Western countries.
What countries? You say some Western countries. Which one? You mean Germany?
Germany, France, to some extent the United States and other European countries. They were always pursuing the policy of half measures towards Russia.
Because they're scared of Putin?
Well, you know, every country is special. Every country has its own reasons to pursue one policy or another. But one of the reasons why this war is happening, it's because everyone was always telling us, Ukraine, you have to concede on this to pacify Putin. You have to concede on that to prevent the war from happening. Now, this war happened. It means only one thing, that this entire policy, Ukraine has to concede on something, failed. Doesn't work this way. So instead of asking what Ukraine should do for a ceasefire, for the end of the war, the question should be addressed to Russia, what Russia should do. And I would like to commend now both Germany, France, the United States for really changing their perspective on this. We still have some discussions, but in principle, they clearly understand that this is a black and white situation, and it's Russia who bears full responsibility for what is happening.
And Mr. Kuleba, you mentioned the French, and I have to ask you about this because over the past 48 hours, there's been a huge debate as to whether or not Emmanuel Macron perhaps suggested to Mr. Zelensky that he should give away some land in order to get a peace deal. Then, of course, the French denied this. What's going on here? Has anyone ever told you, and when I say anyone, of course, I mean global leaders, just give away Crimea, give away something in the East? Have you been pressured to do that?
I was not present in the conversation that my president referred to, in the conversation with President Macron, so I cannot comment on this. But before 2014, before 24th of February this year, when the war started, yes, there was some. They were not pushing, but they were kind of exploring the option of what could be the solution. What could Ukraine abandon in order to make a deal with Russia? But I want to make it clear, and I think it's everyone who is watching news from Ukraine and sees Russian soldiers committing atrocities, Russian army destroying our cities. It's not Ukraine to blame. This is an unprovoked war. Neither Ukraine, nor Europe, nor NATO, nor the United States provoked Putin to do what he is doing. And therefore, he must bear full responsibility for that. And, looking for face-saving options for Putin is a simply false approach. Let Putin himself find a face-saving option for him.
And sir, I have to ask you, of course, about NATO. Over the weekend, we had Finland, Sweden applying for this. We've heard a lot of people saying, yeah, we welcome them. I'm guessing for you it's a bitter moment because you tried that path and you didn't get the welcome you were expecting. I hope, or I wonder, are you disappointed? Are you sad by that? And when it comes to the European Union, which we have here in the background, I mean, is this your best hope now? Is it the EU? You've given up on NATO.
I believe Ukraine is the best hope of the European Union, because look how the European Union changed in the last 2.5 months. In the beginning of the war, the perception was that NATO is strong and NATO can act and NATO can deliver. And the only thing EU can do is to express different levels of concern in public statements. And the war proved that everything is completely different. It's NATO that, as alliance, as an institution, can do very little, if anything. Allies, yes, they're very helpful. The coalition of the willing, who represent part of the alliance, they're very helpful. We will never forget how they support us. But NATO, as an alliance, did nothing. EU sanctions, strong political statements, economic support, financing military support to Ukraine. European Union is back on track as a driving force, as someone who shapes the future, who can shape the future of Europe. And it's Ukraine who gave them the chance to demonstrate that they can.
And you make that very clear. Dmytro Kuleba, thank you very much. I know you're heading to The Hague tomorrow also too. I know you told me you want to pursue this case of criminal charges against Russia and the Russian army. Thank you so much for your time, and we appreciate it at such an important hour for your country.
The pleasure is mine. Thank you.
Jonathan?
Maria, thank you. A wonderful interview with the Ukrainian Foreign Minister. TK, what a difficult moment for that government.
It is. It's a terrible moment for the government. And as Maria said there, you've got Finland and Sweden. NATO exercises, John, in the Baltic states. Operation Hedgehog, Operation Iron Wolf.
From New York, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday